Good morning and welcome to today's live show. You might see some different colors on here. You might see just the weekly and monthly expected moves in frame right now because today we are doing things a little bit differently. We are showing off the expected moves for the rest of this week so that you can see what the private streams overall look like for Patreon members that we're creating a tier for in July, where we are going to physically show these type of setups by these moves and even show these type of setups by these moves, and maybe we'll even see one of those this week. As we go into the 2-hour chart, we'll notice that this has rejected off, but has not lost the previous low, showing to that it might want to go higher, right? So what we're still watching for is, and what I'm still paying attention to is the 2-hour being able to go to the upside to actually set some kind of trap today or even on Friday at the close. I believe that in the last hour of the day, we could see some kind of trap today. I believe that we could see that trap even come in as of tomorrow. And something we can watch on the 30-minute chart if we're going to see some kind of roll today is, do we break the low, get a reaction up and roll that move, left head, right shoulder, or are we going to be able to extend this overall move for Wednesday and really extend this move to then maybe see a little reversal signal here, or are we going to see that on Monday? Are we going to see continuation for a bit of time and see the 2-hour be able to burst higher to get to the monthly expected move? Are we going to see this just burst higher so that we extend that floor into July? And then we're able to shape up those reversal signals. We have to be open to a lot in these type of areas because we still have that squeezability that is on the table, even though I do believe that risk starts to get heightened early on next week. Like, I do think that we are walking the plank up into something bad. It's just, is that bad thing going to happen right now? You do see the 2-hour trying to make a lower high here. If it's able to take out this low and head to lower levels, we're still paying attention if it's positive and curls up into positive territory, say on Friday. But for the time being, you are seeing this 2-hour, if it does want to cross down, this can actually cross down pretty aggressively. You can actually get a daily to cross down from here and extend this for a little bit of time to retest into these lows, take care of some gaps and things like that before you're able to go back up into positive territory, creating some pretty good structure here for volatility. So just be aware of that. This move can continue. Just kind of knowing how it could be irrational is the best thing. And what are we looking for, right? And if this doesn't shape up, then what is? If we're looking for a 2-hour divergence up here outside of this blue line, the quarterly expected move, outside of the red line, outside of the purple line this week, maybe, right? If we're looking for all those things, but instead we wipe out those divergence points on the RSI, maybe we wipe it out on the MACD as well, then we need to be paying attention because we are seeing something change and we most likely will continue, right? This is the moment where you can say, okay, is it highly probable? Well, I have to see things confirm for it to be highly probable. And as of right now, we're sitting back, relaxing, seeing some kind of little positive trend start up here again. And we're seeing if the 30-minute can go into that positive territory, where if it wanted to extend this into Friday, we could see something like this take place. Maybe we see something like that today with FOMC, the Fed interest rate decision, and Jerome Powell later today. We will be live later today for Jerome Powell. We'll be kind of like listening in on that and looking at stocks. Just note that during Jerome Powell moments, you do see little moments of volatility. Can't remember that last time where that was. The last time, where the heck was that? Oh, it was down here, I think, was the last time we ran our head into some of that. Right here, just expect this when it actually starts up. You see this, 1 o'clock, boom to the downside. By the time he's talking and done talking, boom to the upside, and you kind of see this down into up, into down, into up, right? So that is something that can take place. Volatility can increase at that time, and volatility, implied volatility, has increased as of today. So just be aware of that. Is this really, really bad? No, we actually stated that a test of something like 598 is very possible, and that's exactly where we're at right now. We're just, we're just below there, testing these areas, trying to set up what? Well, you're potentially trying to go grab those buyers to actually head higher, but you went negative, which isn't necessarily a good thing. So we need to see us go positive to say that this move can overall continue, or we're at risk of seeing some kind of roll where we take out this low, and start to head down to 580. If not, 570 or 560 at this point. If you wanted the levels, since we do have my other charts that I am paying attention to, if you wanted the little brackets that I'm paying attention to, no, I'm paying attention to this one. Coming above that center, showing your face above there is a good sign for the bulls, but you're still coming in from the top side, meaning you can see a serious rejection here. And what you're going to do is you're most likely going to react down from that area and try to retest into this one. If you're going to get more aggressive, then I think you're going to come down into here, meaning we might see this little bit of a ping pong moment, create a divergence, and then be able to shift that thing back up come mid or end of July. So we'll be paying attention. The reason I'm saying end of July, even it could go into August, is because if we extend this move for a bit of time into the end of the month, and then we see that reject off, we can see how that would take more time to do all of this process. And that would lead you into maybe mid-August if that were to take place. So really, I am still looking at the end of July for some kind of daily pullback, but I am open to it being longer, more drawn out than I expect. I do believe that people are about to celebrate in September the potential for rate cuts, and I think people are wrong about that today. You're potentially not. You really don't have the percentages to get a rate cut right now. You have a 99% chance. I'll look it up again just to make sure. That was the last time we looked. Let's make sure. It's gonna be that though. Where the heck is it? There it is. As of right now, you have a 99.9% chance of things just remaining the same. As of next month, you have an 85% chance of that staying the same. It starts to increase to a rate cut percentage probability of 55%. So it starts to flip in September. And then from there, we start to flip, and it looks like we could see potentially a cut in September and a potential cut in December as well. So as of right now, it looks like we potentially could have 2 cuts by the end of the year. That starts in potentially September, according to the data we have at this point. These numbers can change, and we will continue to update you on those numbers. If you would like to screenshot it, or click that web, copy and paste whatever you need to do, cmegroup.com. If you wanted to look at this, that's perfectly fine. You can screenshot this right now, but it's better to have the actual site. So we're going to have some of this material over on Patreon soon. I'm going to put some of these things out there. But yeah, this gives you a guideline of today. And so if you're expecting a rate cut today, not necessarily on the table. All right, if you want some good news, the type of good news that you could get is not a rate cut, but instead a rate cut later, right? They could announce, hey, we're looking out to cut rates in September, and people could celebrate that initially, but it's not happening yet. Then we start to break down over time. Then we start to scoop up. So that's really how I think this market's going to behave. I think the daily pullback is coming with the opportunity to still extend that move because we are not outside of the monthly expected move. If we really, really wanted to, we could end up at that monthly expected move. The reason we're very heightened as far as risk goes for this week is because we have the quarterly expected move in blue at 604.83, where if we set some kind of trap this week, it can give you those daily pullback signals. So you're really just like pretty calm here. If you're trading, short time frames, I'm sure you're a little bit happy that volatility is increasing and you can make those little ups and little downs. But for now, it's just looking like we're still just waiting to see. Is this thing going to roll? Is it going to curl up and set some kind of trap to the upside? Is it going to be able to test above 605? Is it going to get to 610? Those are the questions that you probably ask for this week. And then you say if it gets to 610 and we see any form of weakness, we could see a dump going into next week. So we'll be watching. How are you guys doing this morning? I'm going to take a big old sip of the coffee. Big old sip of the coffee over here. Get ready for the day. Still 99%. Okay, Oakland's got me on that one. 0.01% chance of a cut. Hey, I'll tell you what, though. The guy who bets on that and the time when he's actually right with the 0.01%, man, you're going to make some money there. You're going to make some money. I do think AMD still wants to potentially pull back. We do have the levels for AMD for you. As you can see, this is the risk, right? Having the lines on the chart does help you. It does tell you, like, hey, I am seeing something crazy for a stock like AMD, and this is not necessarily sustainable at this moment. This is most likely going to need a big daily pullback, and that's the truth of it. As it stands, the 30-minute can continue the move, but is that 30-minute just going to continue the move into some kind of trap and then roll over? Are we going to see this pull back even further before it's able to head higher? Because I still think you need a test of 124 at least to actually head higher. So I would like to see this kind of flop that for a second, then be able to curl up into positive territory, but we'll see. I just think you're looking at this and you go like this, okay? Look at the daily scale, look at your monthly expected move for AMD. Do I really want to be like buying a month out call position right now? Most of the time, if I buy a month out call position and I am above the weekly, above the monthly, especially above the monthly, and I decide to take a position here for even like a week or two, it's going to be very, very risky because all you can see is bam, and you're done, right? This happens all the time outside of these lines. And you'll see AMD by the end of the month will most likely do what? It will most likely be below that yellow line. So why would I go long here into the end of the month? Like right now? If you're long, you're in very extended contracts from here. Like, yeah, you're looking at decision time, but this is where you could like leave runners. It's totally different if you're in this earlier. If you're starting a position now, you're going, oh yeah, I'm gonna start a position when there's a 68% chance I do that. I'm gonna start a long position for this when there's a low percentage chance we do that, but a 68% chance that we do this. Right? That's all you have to view with AMD. The same thing could be said about Meta. Meta is going up to those critical levels, and Meta is rejecting now with even a lower high for Meta, which can be bad, from the monthly expected move. We see that it went up to what? The weekly expected move, right? So we've kind of already done what we need to do. Bam to the upside, weekly expected move, we reject off. Now we can see if a little trap sets up right here, right? We can see if a trap sets up here. You're looking in here, you're looking in here for that pullback moment, right? So as of right now, starting a position for upside, you know, if you wanted to hold calls for 2 weeks, this ain't the look for it. And this is how we talk in the private streams. We tell you, I tell you my opinion 100%. I tell you, and I'm using my opinion with data to prove it to you. This is not good. The last time that Meta was able to get above a monthly expected move and see a major drop, it was this into this. This was literally a monthly expected move, and you had 2-hour divergence at that time. Bam. On the MACD and RSI at the same time, on the RSI. Awesome. Cool. Now what? We don't necessarily have that, but we have rolled this move as of this moment. So we got to catch ourselves here. We got to turn up and do something kind of irrational here and just turn up and create that divergence point. All right, the 30-minute goes boom, boom, boom. We look at the 30-minute. We see the 30-minute down by the center line. We see the 30-minute curl up into positive territory. We see the 30-minute drop down. All of this is what you're pretty much looking for Meta as of right now. We told you, we're going to show you exactly what to look for from these stocks. I'm going to show you exactly what to look for. This is what you're looking for today. You're looking for probably going to be dry, right? The market might be a little dry until like Jay Powell. But once he comes out, you want to see if by the end of the day, you're at those vulnerable levels, right? Now, we have the opportunity to extend. You always do, right? You have the opportunity to extend into Friday. But either way, you're looking for what? I'm going to treat this as a blip. If we turn to the upside and say the 2-hour divergence is what I'm really paying attention to, do we see this extend up and then reject from a lower point than about 77.92? That's all I'm looking for Meta. Let's go through them. Let's go top to bottom if you guys want. Apple, we see what? It's not necessarily by a weekly or monthly expected move, so it's just kind of right in the middle still. So what's going on within the middle, and could I catch something here? Well, if the 30-minute would cross up, it would say, hey, I'm going to try to go into a positive trend for a moment. I'm going to try to curl up the 2-hour. You see that there's 30-minute divergence down here. You could execute on this one, right? This is a trade that you could try to execute on. This is divergence on the 30-minute, triple divergence there, triple divergence there. If this curls up, it says, I'm going to take back the 5, and I'm going to try to go for a run here. Where could it run to? Well, it could run all the way to 203.47. The 2-hour would bounce up. The problem with this 2-hour is you already lost a lot of what you need to keep. So if this 2-hour is going to curl up, even with that little 2-hour divergence, you got to see this thing scream through that zone, use it to head higher, right? You need to see a big ass move here from Apple, or else it could just go up to this type of area towards 202 and just roll that move, as you've already lost this low for the left, head, and right shoulder. If you want me to delete this and draw that again, this is what is actually the most probable for Apple, is it is going to go up and make some kind of right shoulder. Now, you do have a 2-hour divergence. So this is telling you, like, hey, be aware how positive this goes. Be aware if the daily chart is able to cross up. Be aware of those things. Because overall, you still refuse to lose those lows. So if you're able to turn up from here, that would still be a good thing. So you're in a place where Apple's kind of in a different spot than everything else. You're in a place where Apple is not confirming the 30-minute divergence as of right now. We'll see if that's able to take place. Tesla, very, very good. Now you can see why we were paying attention to this level so critically right around the center point here. Now you get to put it together of, oh, they had a monthly expected move down there. A higher low is down there. It crossed up from down there. What is likely to happen here? Well, we haven't really lost this low completely, but we're still looking for the moment if it can roll this. So it turns up on the 30-minute, you look for a lower high. But if this thing can get going, right, if we can actually burst to the upside, say on a 2-hour chart, which is crossing down, I believe, right? That's not a good sign, but it is relatively, it's positive. Okay, we'll give it a chance here. So if the 2-hour is able to do this and then able to make a new high, where do you think you're going to? Well, you could potentially go to that weekly expected move. Where's that weekly expected move lie? Well, it lies almost right in the middle of everything that could really reject you heavily on, say, like a daily time frame. So if this is able to go up to this level, you could see that this is just some kind of boom, boom, and then we reverse back down over time. And I think that you're ping-ponging between these areas right now for Tesla. So we'll see if that's able to take place. This means that 2-hour crosses up, good things can happen. Maybe use an hourly chart for some kind of confirmation there for a swing trade. As we look at something like Amazon, you can see why we are paying attention to 220 so critically this week. And you're seeing we get this little blip for the 30-minute cross down. We go to the upside, and we could set that trap right on the dot at somewhere around that 220 level. And then that's where we can actually have the divergence point to fail, right? So this is why risk gets heightened, because you're seeing a few things that could get to their monthly expected move, even though the SPY and the Qs are not. We always want to act like, hey, there's a chance it can continue, but we're still watching. So you're looking for 2-hour divergence here. You can see the 30-minute able to cross up here. I don't think you'll see 30-minute divergence right away. I don't think it'll be here. I think you'll get like one slight one on the RSI if you're going to see one, where this kind of goes like this, and you just see it kind of on the RSI down here. Or watch out for what? Lower highs are just as good, right? Lower highs are just as good. It can tell you when things are shifting around. Nvidia, 30-minute needs to cross up here. That's a big deal. Now, you can hold up anywhere in here. You just don't want to lose these lows. You want that 30-minute to get going. Watch out for 30-minute divergence for something like Nvidia. As of right now, I think it's confirmed that we are rejecting here. So Nvidia is saying there is major risk. Nvidia is saying that. The price action's still not, but your indicators, your momentum signals, they are saying that this is at serious risk of seeing that roll moment take place to actually create the structure to break down. If it wants to break down even more aggressively, well, then you're paying attention to this low all the way at 132.89. But now you have those weekly expected moves. We're dipping into these areas, so we'll see what's able to take place here for Nvidia. The risk is heavily, heavily heightened here as of now, but you see how the monthly expected move is just at that 150. We haven't gotten there yet. So if we wanted to do something irrational, this would be the moment to do it, to set that trap into end of month and then we start to head in that downward direction. You still can do something like this into the end of the month. I'm not going to play any kind of upside here. I'm really going to be paying attention to volatility and seeing if that can curl back up, if it is able to show a little bit more downside. You are at heightened risk like right now. AMD, once again, just out there, man. You got to be careful with anything that's out there like this. You have 2-hour divergence on your RSI. This could be done into some kind of bounce. This could be done into some kind of bounce that falls down and breaks that low, right? There's plenty of ways this could break down. As of right now, the 30-minute you would suggest is going to continue, and you're going to create some kind of shorter time frame signal in here. That would mean that this still pulls back into these type of areas, then is able to curl up. That means we see some kind of brief pullback right here, and then we are able to curl up, maybe even into Friday, where we set a trap on Friday. So we'll have to see how this plays out. Meta, once again, in the risky spot. Be careful in these areas. The monthly expected move is suggesting that this is pretty much tapped out, so just be aware of that. It can do irrational things, right? It can do irrational things, but we haven't shown the new high, so just be aware of it. Microsoft, we see that this is trying to get a roll, isn't it? This is trying to roll right now, so that's not necessarily a good thing, but you're holding up at the wick for the moment. Pretty much a test of the high. Lost the low, so just be aware of a little bit lower testing if we're not able to just wick completely up right now. The 2-hour overall looks like it is consolidating, and if we wanted to, you have enough divergence here to reverse down, but if Microsoft wanted to, you can see where it would want to set that euphoric trap. So Microsoft could see like a burst moment. Maybe we use something like FOMC to do so. We could just roll right now, right? Watch these things if you start to lose these lows in here, right? But if we're wanting to set some kind of trap with the Fed, well, we could do that going into the rest of this week. We could see upside into Friday if we wanted to. We could see a dramatic upside today if we wanted to. But for the most part, we're looking for that 2-hour to go tap into that monthly expected move. And I think this week is suggesting you can get there. Look at the 85.72. This week is suggesting watch for some euphoria because that could end up failing. Google, as of right now, Google is not necessarily in the risky spot. And this is why we're talking about some things being able to continue the move right now. If you really want to see the trap set up for something like Google and you look at this, you go, okay, my weekly expected move is by that high. That's good because it gives you a guideline of like, hey, I could see this into this and that would be divergence. I could see this into this and that would be divergence. Either way, if we get a closing bar above this level, that's a big deal. So we're still looking for the 2-hour to go up and then curl back down. Now you see things are starting to roll, so you look at your 30 minutes. If this is where your management for the trade is necessary for something like Google, just be aware that those decisions can be made now. Now, as of this moment, you're still raising that floor just barely, but you haven't necessarily gotten that breakout moment. Now, from your 30-minute, we can see a lot. I think you wanted to see positivity early on today, right? Get up to these type of levels, just boom to the upside, pull it back, boom to the upside, then you see something on your RSI, but we're not getting that as of this moment, so we'll just pay attention. As of right now, a 2-hour divergence by the like 182 to 185 would be something to pay attention to. Like I said, these things are what? They are potential trade setups, right? These are potential trades. This is you planning out a trade before it happens. If something different happens and you don't have a plan for that, you're not trading the damn thing. You got that? Like, do we understand that? I know I'm not reading chat a bunch right now. I'm trying to get through a bunch of charts. I'm going to read chat in a moment. But if I'm expecting this, but this ends up happening, did I ever get the trade? No. Okay, if I'm expecting and my plan is for this and this happens and I miss out on something, am I bummed out? No. You will see a setup. You will. That's why we pay attention to multiple stocks. AMC and GME, we'll go over those. Look at that. We got the test of $3 that I was looking for. If you didn't know, for AMC, we were paying attention to a block down here that I don't quite have marked off right now. But the block we were paying attention to was this one way over here, and it kind of adds up to this area right in here as well. So this is still the good one. is right here to right here is just a great area to pay attention to all the time. And you want to pay attention if you lose that zone. That's why it's in red. If it's in red, then you know losing that zone would be a bad thing right now. Then we can curl up, then we can reject off it and head down to lower levels, maybe a monthly expected move downside. As of right now, you're looking for the daily to do what? Tap into $3, show you a reversal signal, then be able to curl up on the daily scale. The daily scale is overall positive, so that is a good thing, but it is not curled up in positive territory. So you got to find signals for that. I don't believe you do. Let me look on the 2-hour. Do you have it on the RSI? No, not there on the RSI. So as of right now, you don't necessarily have it from the 2-hour. So if you want this to turn around, you're going to make a divergence, or you're going to see something like this take place, right? If you really want this to reverse around, the first level you have to take out is right around that 325, right around this area right here. And then from there, you have to see an explosive move to take you above all of this right here. That's going to be a big deal. If you can do that, you can use that as support to keep going higher. You kind of just want this guy to pop off. But as of right now, you have a 30-minute divergence suggesting that the 2-hour can get a decent move. It's not the closest to the center line, but it is a divergence. You always want to see when these ones make like a triple one because they're just a little bit further from the center line than you would like. But this is suggesting if it curls up, it has a chance to go positive. That's where you look for confirmation. And then you look for that move to take you all the way past this high. And then in here, what are you doing? You're looking for that management of the trade type moment. All right. If you want to, we can do that for AMC. Because I am in AMC, just so you're aware. Yeah, I'm in AMC. So if you wanted me to track that trade for you right now, is kind of the time. Okay. As it stands for GME, this hasn't been able to curl down yet, and it looks extremely flaggy, which is when you look at the 2-hour and you go, okay, are we going to make a divergence here? That's a serious question at this point. Are we just leading up into some kind of quick little spike down to then spike back up? Are we going to see this break to the upside and set a higher low before going higher? Or is this just some kind of trap? Is this just a shakeout because they're done with whatever, caused them to sell off here? That was the offering. That offering's done, right? That offering's done, and they just raised even more cash. So that's not a bad thing. And so we were suggesting this could be a shakeout. And you know now why we were paying attention to our zone down in here and why we also were paying attention to the price point of about $22 because it takes you just below the monthly expected move. And so the monthly expected move is what we're using. And we're saying, hey, I think that people might have this a little bit wrong and we're not going to keep doing this. But instead, we might set something up that shows that we can do this instead. You need to take back all of this. You need to at least get above $31 to have a chance of this thing popping off again. What you would say is going on here is overall you're making the right shoulder that could have been from way, way back when, which is pretty crazy to me. Okay, as we look at something like DJT, we can see it's at the lower end of its monthly expected move. It's getting closer to it. It still has plenty of room to go. We see that the 2-hour is trying to set up a bunch of divergences. It failed those divergences. So we never saw confirmation for the trade setup we looked at the last time we had a private stream. The setup we were looking for was right here to curl up into positive territory. It never ended up happening. We continue to roll these moves. As you can see, we never had confirmation from the price action, and you never had confirmation from your MACD, and you never had confirmation from your RSI. So not one bit of this should have faked you out. For the time being, we can see that the 30-minute chart is trying to create some sort of divergences, so it looks like a 2-hour move could come. What you're looking for from that 2-hour move is a big move to just take everything out. Everything. Now, taking out this is good. Taking out this is great. Taking out this right here adds up to what? A higher low that can then take you through this. If you get a bigger move, then you don't have to revisit as low. You can literally see this burst up through here, curl back down into something like $21, and then be able to figure its stuff out and curl up into positive territory. So you're still looking for some positivity here for a trade setup. The trade setups you're looking for, 30-minute executing on a 2-hour trade. That can potentially take you above here. That would be one. The other one would be being patient to see a reaction, see that curl down, see it come back up and say, okay, I'm ready to make a decision. We're in a positive trend. That's overall what's going on there. SoFi, as it stands, we're still looking for the 30-minute divergence. We are seeing volatility start to increase a little bit. But if the 2-hour can get up to this level and set some kind of trap above the monthly expected move, be aware of that towards 1529. 1550, 1529 are the areas that I am paying attention to for something like SoFi. You could also just see a little move like this and it starts to reject because you have a weekly expected move there as well. So you'll be looking for a move potentially outside of the monthly expected move. That can cause a daily pullback. So now you are aware of it. Remember how I like to discuss. This is another point here, right? We're talking very seriously about how to execute on these plays. You want to treat an irrational market like it can continue to be irrational. So if you are planning to go against an irrational market and take some kind of short position, long puts, whatever you want to do, if you're going to do that, I highly, highly suggest always doing a lower amount of money during irrational times. Because if you're wrong, you don't have to be wrong in some kind of big way. It's not going to affect your next day. It's not even going to come close to affecting your weekend. But if you're wanting some kind of good trade, $500, something small, a small amount can make a lot if you go from SoFi here to SoFi here all of a sudden next week. So just be aware of that. This would be the first leg down that you are trying to execute on if this were to set up. Palantir. Palantir is the crazy one. Palantir is genuinely the crazy one. Ending outside of a monthly expected move, I believe even last month, going to the upside, setting up daily divergence. You have to be very, very careful with Palantir here. I know it's not at this, but it already saw something crazy last month, and it's already seeing like it's holding up better than a lot of things. So if the daily crosses down here, what do you think is going to take place? Well, we could see that stair step kind of moment where it comes down into these type of levels. We could see it be more aggressive than that if it really wants to and set up that divergence point towards what? Towards early August, towards end of July. If we want to figure it out earlier, then we would just see some kind of pullback like this and be able to curl up into positive territory, not losing the critical lows at this point. All right, but Palantir, here's how I like to treat stocks that look like this. Divergence on the daily MACD, triple divergence on the daily RSI. I just don't even pay attention. I'm just like, okay, I'm not going long on this stock, right? That's it. If it wants to go scream higher and it wants to be Palantir, who all the politicians are in, and it wants to scream higher, that's fine. It's not necessarily what I want to try to execute on because it's going to be very irrational looking and you're not going to be able to use signals well enough to really be able to make money easily with that type of play. And normally consistency is what I like to do here. And consistency means if I see a divergence on the daily MACD forming and the RSI, and we are at extreme highs and we are about to go into elevated risk, which we are in today, then I'm not necessarily looking for a good bullish trade on Palantir right now, but I would look for it later. I would look for it later. I would look for it later. Okay. This is suggesting you can get a weekly cross down, by the way, so don't mess around with this signal. This is suggesting the weekly chart can cross down. You have weekly divergence on the RSI, not on the MACD. So I think that this would tap into where potentially the fair value, right? We could go all the way back down and test into something like this without seeing too much disruption. We could see something like this, bam, and then you start to curl up again. So we'll have to see what takes place here, but it looks like we are going into a time of volatility for Palantir. The problem here with gold is it looks like it wants to potentially set up a reversal signal up here. I believe you even have weekly charts that are scaled up pretty dramatically. So even though the market is kind of setting up those topping signals, so is gold in some way. So what you need gold to do is really break through here and see something kind of irrational, something crazy for gold, which might mean bad things for the market if you see it. For the time being, for the 2 hour, you're looking for that to curl up and set up some kind of reversal signal above 318.98 for GLD. That's how we view it at this point. If you want to head higher and we're going to see something bad, well, then you would want to see this pop off to raise that floor to continue to do irrational things going into July, just so you are aware. AVGO, this is one that I am looking at as well, seeing if that can get to the monthly expected move with some kind of A, B, C type push. But you notice that the weekly expected move is suggesting pay attention a little bit earlier. This will probably benefit an hourly chart. Maybe not, like it just looks so wonky. We would like to see this from something like AVGO. If you want to be 100% here, you would really like to see this extend for a bit of time into next week. So I'm still leaving it available to extend into next week. It really depends on what signals look like at the end of today and what they look like at the end of Friday. But we have done some price action that can overall extend the move. We already went over Microsoft. For JP Morgan, we see that it's getting above the weekly expected move. It is seeing an uproar right now, trying to do some crazy good things, potentially setting up a daily divergence point, but raising the floor. If JP Morgan is trying to raise the floor here, I would be paying attention because that means that we could extend this for a little bit of time, maybe even to get to that yellow line, the monthly expected move, 281.60. Be aware of it. 30-minute chart looks like you're wiping out divergence, so looks like we're raising the floor, but risk for the week gets heightened at 272.49, so you are now in the decision-making area, and this is where if you had longs at lower levels, you would be making a decision if those are expiring this week or potentially even next week so that you could take some kind of pullback that curls up into positive territory one more time. Let's go give a quick look over to Bitcoin. Bitcoin rolling this move right now, not necessarily a good sign. Looks like it might have already topped out like we were discussing with the lower high. What we're really wanting here is for this to come down and test something like 95K would be fantastic, but it can come all the way down if it wants to and test like 85K. You would really like it to hold up right here. I'll just put a line there. You would like it to hold up somewhere around this line. That would be a perfect area for the daily to just be done, right? Daily gets aggressive to the downside. Boom, boom, boom. Just a big, big wipeout, right? Maybe you figure your stuff out down here for a while. Come down a little lower. Then you're able to curl up into positive territory. You're kind of looking for a weekly pullback. So you might be looking at a few weeks here. And you do have weekly divergence. So man, I mean, the weekly signal for Bitcoin says I might have topped on the weekly scale. So if you lose this low for Bitcoin, I would be very, very critical of Bitcoin and be very cautious with it. Yes, that weekly can figure its stuff out and turn up into positive territory. We can kind of see how that would take place, but that means we're going to go through something bad for Bitcoin for a period of time. So just be aware of that. All right, let's go back over to the SPY. Let's look at a 30-minute chart, and then I will get into the chat. Sorry, I wanted to make sure to get through a bunch of stocks. It looks like that 30-minute is trying to curl up with the higher low now. We are looking for a euphoric move here. Boom to the upside is what you are looking for the SPY. We went through all the stocks, so if you, any stock that's on the right side here, I'll go through them right now. We have already been over the SPY, the Qs. I don't think we looked too much at IWM and DIA, but we did look a little bit at Apple, Tesla, Amazon, Nvidia, AMD, Meta, Microsoft, Google, AMC, GME, DJT, SoFi, Palantir, GLD, AVGO, and JP Morgan, and a little bit of Bitcoin. So just be, clicking back if you need to view those at this point. Thank you guys so much for being here today. Thank you guys for liking the stream, and I really, really do appreciate it. You guys are fantastic, and I look forward to being here with you guys for most of the day. I am going to take a break at my regular time when I hop off in the morning to go to the gym, get some lunch, and then I'll be back on the live stream. This live stream will be left up all day today. This is how we're going to mostly do private streams, is they are going to be left up all day, so you guys can continue to communicate in the chat, and whenever I can come back after lunch, I will hop back on the stream. This way we are able to see a little bit more than power hour at the end of the day. This way we are able to see that morning just like we normally do. Cool. What up, Polar Bear Man? How you doing? You're like an auctioneer today, Lucas. Yeah, I feel like there's just a ton to get through because this stuff needs to be explained. You've already heard it. If you've already joined the private stream, you're kind of used to us just rattling off and going through a bunch of stocks. The reason that I'm just talking a little bit more today, which is slightly different from the private streams. The reason that I'm talking more today is because I want people to be informed about what we're doing today. We're showing you potential setups to execute on, and we're going to show those off if they set up at the end of today or if they set up on the end of Friday. Is rewind still even a word? That's true. I'm sorry. I grew up with VHS tapes. I still have them. I still have like all the kid Disney movies on VHS. I miss VHS. It felt so cool. I love those tapes. All right. Hey, with my nephew's before I'm gonna hit the beach for a bit. Taught my oldest nephew 55% how to swim. Oh, that's awesome, Polar Bear Man. Congratulations. I hope he's having a blast. That is awesome. I love to hear that. I can literally imagine it in my head right now. You guys having a good time. That's awesome. I still have my old yeah, I do too. Dude, I love Ninja Turtles. Gosh, I was shaken out of Marvel and Reddit last Friday. Oops. Hope your VHS player doesn't break. We had the VHS TV. We were pretty my dad worked in tech. He still does, but he worked in computers and recycling computers. So we always had like a cool TV. And back then the cool TV had a VHS in it, guys. Bro. Yeah, tell your nephew we're rooting for him, all right? Learn how to swim. My wife, did you guys know my wife does not know how to swim? She can like float, like tread water a little bit, but she can't really like swim. I was like, what the hell? Like I like lakes. I want to get a lake house, like, and you can't swim. Oh, the VHS DVD combo was insane. That was insane. Yeah, switch between the two, exactly. So what we're going to do is, with private streams, by the way, we're going to kind of do like that Sunday update stream, and then we're going to have those stocks to watch. As of right now, those stocks that we were watching were last week were Tesla and Apple. Apple failed the daily swing trade signal. Now Apple is setting up a 2-hour pop signal. We'll see if it's able to take place. This means that Apple is potentially going to curl up on the 30-minute, and you are going to see a 2-hour move to the upside to potentially reject from something like 202 or the weekly expected move. The way that you go bullish here is you have to see enough positivity to take you through all of this, and then you can start to raise that floor and see how this would give you left head, right shoulder. But as of right now, Apple is heavily leaning towards a what? A 2-hour lower high, just so you are aware. Just wanted to point this out so you're not saying like, oh, it can do this, right? We need to see crazy good news. But also the more probable thing is just come up into this type of area and then start to roll that move as you've lost this low. And then you continue to lose those lows. And once you see a low below this one, you're going, oh yeah, I don't care what the counter trend move is. This thing is turning down one more time. Cool, cool, cool. What's some cool plays out there? Someone's got some good stuff. CVX. They have flotation devices. I sink like a rock. I sink like a rock. It sucks. Doesn't know how to swim yet. She doesn't want to learn. She's one of those people that like if she can't do something right away, she gets frustrated with it and like doesn't want to do it anymore. That's just how she is. My daughter is showing the similar signs too, which is really funny. As it goes for Chevron, I really do see like you can definitely see here, right? You definitely see here how the 30-minute could continue, right? Looking at this one, Duranto, you kind of see it, right? You're like, this is really freaking positive. So what do you need to see? Well, potentially you can come all the way back down and take care of this gap, then actually turn back up and set some kind of trap. I don't have moves for this. As you look at the 2-hour scale, you're going, oh, this is really up there. If this is going to time out to want to turn, actually, no. Okay. Right there. Daily. Yeah, daily's right there. Yeah, you're going to have to get through a lot of these sellers. And what I'm going to do is I'm going to mark it off with a zone. I'm going to mark off most of these sellers with a big ass zone here. All right, you got a big zone that you're going into. So this zone here would say what? Where are we coming in? We're coming in from the bottom, which means we're heavily likely to reject in the bottom side of that zone. If you reject from the bottom without peeking your head up, you can go revisit lows is what can happen. It opens the door to that. If you like reject right now and you just roll, you can go all the way down to these lows if you want to. Now, this is positive. I don't think that's coming. I think this looks like it wants to continue, right? I just said that on the 30-minute. So you're seeing if it can just peek its head above 154.77. If you can just peek your head above there, yes, it does still say I'm rejecting, and you can watch out for those lows, but it's a lot more likely to go and use something from the past to actually curl back up into positive territory and try to break the top side of this zone. If you can get some kind of squeeze moment here, that's probably best case scenario. You squeeze to the upside, you pull it back down into these areas, and then you head to the upside one more time. So you're still looking at this very critically. You don't necessarily see 2-hour divergence on your MACD or RSI, and you don't see it really on your 30-minute either. So you have to understand that this can continue to be irrational for the time being till you set up that kind of weakness in momentum. Either that or you're just going to walk into some kind of big seller. This area is very, very critical. Richard, didn't you have one you wanted to look at real quick? Do you want me to look at it? Look at the daily divergence. It's Siri. Yeah, let me look at it real quick, buddy. Before you take off, I'll try to do it quick. You just want to look at like dailies? Oh God, this is like a weekly rejection. Oh, that sucks. This looks so good. I still want to treat it like it can be good, but it did not do what it needed to do, right? We did not do what we need to do. So just be aware that this could be setting up a lower high right now. You can roll that. You can head down into like end of July, like we're discussing, create that divergence point. Then you take this back, and then you start that upside move. And you hope that one of these is just bigger so it raises that floor for the weekly chart, okay? That means the daily divergence is something to pay attention to. Now, this is that first leg, right? So this is the first real leg here. And so you can hold up in these areas. So you really want to be paying attention to your 2-hour right now. And you want to say, hey, does that have divergence? Like, can this curl up? Am I going to see a counter trend move to reject? Because you're very likely to do what? Well, you're very likely to grab some kind of liquidity at some point here, right? Overall, 2-hour move to the upside, does it actually show that it can cross through this high? Like, does a 30-minute never show reversal signal and you turn down? Does the 30-minute instead boom to the upside, curl down, boom to the upside, and take out that high? Because as of right now, the 30-minute or the 2-hour chart is leaning towards a lower high, while the 30-minute is saying, hey, hold my beer, let me try to come back first. And you are trying to raise that floor just a little bit. So I think that Siri, if this is able to confirm up, go positive, get above that 5, you look for if that takes that out, come up into this area, come back down, curl back up again, and then you see if you can set some kind of trap up here for the 2-hour to cross down. If that doesn't show up, the 2-hour might just get going. 2-hour can just get going for it, all right? You do have 30-minute divergence on your, or no, not 30-minute divergence, actually. 30-minute higher low on your MACD or RSI with actually a peak lower, which kind of leans me towards not necessarily a higher low, right? So this is kind of an interesting look. And therefore, I would still be paying attention to the 2-hour lower high for Siri. Very, very nice. Sweet. Scared him off. Thank you for the overview. Of course, Toronto. Thank you for being here today, buddy. If you ask me to look at a stock, you better like the video, you bastard. No. UNH, yeah, actually, we haven't looked at UNH in a while. Let's go look at this. You notice that my charts are not drastically different, right? My charts are not drastically different from the other ones. It's more about your thinking towards it. Just having the lines up can make you think towards it. How we talk about it can be different. This right here, it just looks very flaggy, and you're still at the potential to roll this. So if you can confirm down below these levels, I think you're going to end up going lower. You're going to roll the move. Where could you be heading down to? Well, you made right shoulder here. You lost this. 30-minute goes like this. So you're looking for one more move down. Watch out for divergence, okay? 2-hour. Yeah, technically you got to take out like this. That's too low. My goodness. That's right. That was that crazy move down. This is a little low here, but if you can find that little 30-minute divergence right here, that would be nice. Just don't want to lose trend. If the 2-hour can also just curl up into positive territory, this is a swing tradable opportunity here, where the 2-hour crosses up into positive territory. Maybe you see it on RSI and price action. You take that, and then you say, hey, if the 30-minute rolls, I'm out. 2-hour curls up here. you have a chance to hit this high, right? Test up there, test the gap, test up here at this high, or make your way higher, right, for UNH. You do not have divergence on your MACD. You do not have divergence on your RSI, so continuation is very likely here. Now, if the 2 hour goes like this, and then on Friday you see that start to roll, just be aware that risk is heightened over this weekend going into next week. Risk is heightened from right now all the way through July 30th. Risk is heightened to find a top at some point. If we want to be super irrational and continue to do crazy things, well, then we're looking in July. You're looking around July OPEX probably for this market to hold up. I think you're just going to turn down. You're going to hit a monthly expected move to the downside in July. That's what I think. But for UNH, it looks like it wants to potentially continue the move to the upside. And then you watch out for a trap, not able to fully show the way higher. If the 2 hour heads to the upside and fails, you look at daily charts and you say, hey, what could happen here for United Health? United Health, for the most part, if you set some kind of trap here and the daily is able to roll and lose trend, you can come down and test into this wick right here. You can roll all the way down, test that wick, turn back up, and then we'll see what happens. This means, what are you looking for from the daily scale? Divergence with those points on the daily scale. If we see daily divergence on UNH, if you see it or you think you see it, point it out to us, please, so that we can pay attention to it with you. That would be a sign of like, hey, this is an investment opportunity for some kind of weekly move to the upside for a period of time, which could actually take you all the way back up to something like 440, which would be a very, very nice little trade, even for shares. If you find that daily divergence down at lower levels, let's just say it's somewhere like here, and you hold on to that until this area, that is a 65% trade with no options included. It will take more time and you'll have to monitor it if you are like trading it. But yeah, if you're just wanting a good price for investment, then daily divergence is usually when you get that good price. If you want to see an example of it, Apple, you can see on the daily, usually when you get daily divergence, you do see positivity, daily divergence, positivity. I think even here you had daily divergence on our like weekly here, but you had daily divergence here for that counter trend, that bear market major rally that failed. Daily divergence here for a big reaction. So yeah, daily divergences are great, is all you need to know. This was earnings, and during the earnings we said, hey, this is when Apple is good during earnings. This is when I take an earnings, is when during earnings you see daily divergence, 2 hour divergence, 30-minute divergence at the same time. This was the golden setup back in April 18th, around April 18th, 2024. And then just a few days later, like a week or two later, you get earnings and you see major upside. So very, very nice. Is this confirming, by the way? Ooh, Apple, 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 you dog. You gonna do it? It's doing it on RSI and with price action. 2 hour move's the most probable right now. I don't know. This is where you have two reasons, right? Two reasons. You don't really have more than two reasons here for Apple to take a bullish trade. You really don't have more than two reasons. Not yet. If you do this, you might have three. If you do this, you'll have four. This is where you can make early decisions if you're good at managing trades. How would you want to manage this trade? If I take this right now, 22 minutes left in bar, I take it right now. What am I looking at? I'm looking at a 15-minute chart. I'm looking if that 15-minute chart ever does what? Rolls before beating critical levels. Rolls before being able to show I want to retake that 5-day moving average very confidently. This is how we manage trades. We look at price action is something we're adding to it, but overall the management for the trade is just, does the 15-minute roll without showing a new high? Is the 15-minute able to go positive here? That's a big deal. And is it able to go positive enough that it's not at risk of a roll? That's what you're looking for the management of the trade. Yeah, we can look at USO. USO, very, very nice for us because we overall know that this is going to daily pullback. I don't think you're going to see this uproar and scream higher. I think you're going to see it go lower. Maybe the whole Iran-Israel thing like kind of goes away for a little bit. Maybe we see a little period of time where they're trying to negotiate or something like that, because for oil, this is a regular occurrence. And you can say like, oh yeah, when it's popping off, it just continues to pop off. But when you see these major pop-offs, they can continue, right? But they always do pull back at some point on the daily scale to go higher. So just be aware of that. What do I think is going on here for USO? I think it'll continue the move. I think it'll show its way higher. So I think you're going to see something like this, into something like this, into something like this. And you're going to set up that divergence point. Then you're going to daily confirm down. And then that's when I think risk will be heightened again, which actually takes you into that same time frame of about August. So if you want this to continue to collapse, then you want to lose all of these levels. And by the way, these are not, I made the weekly expected moves for these like once. What you're overall looking for, though, is to utilize something here. You're looking to go back down into like this big ass zone right here for a daily pullback. If you're going to get more aggressive than that, then you are looking right here at this area right down there. And you're saying, what? We could go all the way down into there, right? Not on the 2 hour, on the daily. You can go all the way down into there and go up and maybe make a lower high at that point because you are losing one zone. But you'll see if you can break through that zone one more time if you're going to see a new high. So my assessment is 2 hour pulls back, 2 hour, maybe we need to look at this too. It is good to look at the futures here. Yeah, you'll see this is rolling. So I think you might even get your daily pullback sooner than I think. Let me look at 4 hour. Did that curl up and roll? It curled up for a brief moment and rolled. You make a new low here. If you make a new low here for, say, something like US oil, I would be paying attention to this because look at the daily pullback that can come. It looks like we're about to see something like this. Maybe we do extend this move on the SPY. That would be crazy. Because I don't see a world where, like, this is popping off, 10-year yield is popping off, dollars popping off, but the market pops off with it. That would be crazy. I see it more like this pulls back. Okay, the market's able to extend for a little bit of time. So we'll see. So oil is kind of making me look at the market with a way of like, hey, just pay attention if it can be irrational. Let's put it that way. What's Tesla doing? Tesla's ping-ponging between the zones, and I think Tesla has a good shot to try to get to that weekly expected move. If you're able to see a solid confirmation from your 2 hour, you can see how that would extend. I do believe that Tesla, for the most part, is potential to ping-pong in this type of area for a little bit of time before it's able to figure its stuff out. So just be aware of that. I think that Tesla will see some choppy volatility for a while, but overall move sideways for a bit of time. We're going to see like it go up, it go down, it go up, it go down, it go up. We're going to have to get tight again on this, which you are right now. So look for this type of move to take place. You still have plenty of areas where you can reject. All right, so hopefully you're paying attention because we've shown off a lot of things. We've shown off a lot of things where you can potentially execute on. You do have signals to execute on potential bullish trades. You do have ones to execute on potential bearish trades right now. That's the benefit of looking at multiple stocks, right? We've looked at some that people have pointed out. They look like there are some bearish trades there, maybe even some bullish ones. But at the same time, we know that this can continue, and we're being prepared for some kind of upward move that can set up that divergence now. So I see 580 and 618 all before the end of the month. Ooh. It's a bold statement. It's a bold statement, Cotton. Let's see how it works out for him. It's a bold statement, Cotton. Bold strategy. God dang it. Can I get this on my freaking leg? see. 10-year collapsing. This is good. What if like, hold on, I gotta look at something. What if this is the reason we're doing all this war crap? Let me see here. Because I'm wondering why Trump wants to go to war, to be genuinely honest. I'm wondering, like, why. Like, he said he doesn't want to get involved in other affairs, and then he gets involved in other affairs. So, um, yeah, so this is starting to break down, which is very, so this is why I was looking this up real quick, because I was pretty sure. I just wanted to be sure. But sometimes the wartime can actually raise those rates for a moment, and rates are kind of collapsing. So rates are kind of saying, like, hey, I don't know if this war is really going to be as big of a war as we think. If you know my assessment on it, I think it's going to be a reason to get a daily pullback. All right. Let's go look at these levels real quick. I'm just doing some little stuff in the background for a moment here while you guys hang out. 20th, did anything roll? Not a lot of rolling going on. CRWV. Core weave. Look for the 30-minute pullback to continue the move. This is great. This is great. Tap into here, curl up into positive territory, and you got an extended move. Watch out for the 30-minute divergence because the 2 hour is looking very toppy. You don't have to make that 30-minute divergence, by the way. For core weave, this is at serious risk of seeing some kind of drop. You can see multiple, well, not necessarily multiple point, but you see this, and then you pull this out to a daily time frame, and you just go, wow, that is up there. Look at all this on your RSI, and tell me you want to open a long position here. If you're in it down at lower levels, that's totally different. But for this one, you're looking for a daily pullback, if not just a 2 hour pullback. And I think this is more likely to look something like this over time. Now, what it needs to do is extend the move to not make that happen. So we can kind of leave this kind of thing up. It's going to need to extend that move greatly to not happen. And we could leave this on this and see if this type of shape comes up. Right? We always look for the shapes that show us a setup. Right? The reason that we do these drawings, the reason that we even talk about analysis is to pay attention to if it actually takes place, where would I take the trade? Right? If we would make a divergence, where would I take the trade? If we went to the upside, would I take a trade? Well, it's not necessarily what convinces you to take a trade at that point. If you have monthly and weekly expected moves, that's a good thing. Also, with the new tier, I am going to have up a section. I'm going to have up a section that gives you a spreadsheet that allows you to make monthly expected moves, and I'll just calculate everything right there. I'll put it into the spreadsheet, so all you have to do is plug in the numbers, and good to go. All right. So that's going to be in the new tier as well. So you can make an expected move for anything. That way, if you ask me about a stock, you can say, here's the expected moves. And I can say, okay, I'll pay attention to those levels during my analysis. Yeah, I just don't really get why, Adam, at this point. That area of the world is just going to fight forever, in my opinion. And I'm not versed in it to talk about it as much as I would like to. I can have my boneheaded civilian opinion, but my opinion is just, you guys know me. I just don't like people dying. I don't care who you are. Like, I don't know. If I had a son, I would not allow him to do that. I wouldn't. I mean, it's obviously up to him, but I would have my opinions about it. That's all I'll say about it. But I can be different from you. That's perfectly fine. It doesn't mean I'm for or against Israel. It doesn't mean I'm for or against Iran. It's not anything like that. It's more just like a decision based on my family at that point. Yeah. Saudi will eventually offset oil production. Well, let's look at something here. Let's go to a weekly chart for this question. Okay. The reason, okay, here is the truth of it. And I'm just gonna say what I believe is the truth, right? This is the truth that I truly believe. Um, I believe that wars are not actual wars anymore, and they are just conflicts that we turn into wars to make more money for rich people. That is genuinely what I think. I think it is a reason to not pay attention to the debt ceiling. I think it's a reason to do many, many other things to pump liquidity into markets, to always have increasing money supply. That's what I think. And I think that is pretty damn close to the truth. It's probably not spot on, but I believe that's pretty damn close to the truth. That's truly it. Because every single time we see something like a 9/11 or something like that, right? We're at these critical moments. We're at these critical moments where markets really need to hold up. So if you want my honest opinion about everything that goes on in the political world, I think it all has to do with money. All of it. Money and power. And that's not a crazy thing to say. So what you want to be really watching for are the times where things like that are happening. Because if you look around this area, we went up into, say, September. Nope, wait. September was, when the hell was, it was 2001, right? Do I have a 2001? Yeah, there it was. So this, we sell off. What ends up happening over time? We go up into a crisis. All right. What happens here? The crisis happens. We increase money supply again. We just go up. We go through COVID, right? COVID's another example, like a war. We go through COVID. It's bad. But is it really that bad? Like, you're telling me, like, the worst attack on the United States, if you want to call it that, caused a bear market for a bit of time. And then what happened? Markets did what? They end up going up. It's not going to be something that disrupts market for a long time. What will disrupt markets for a long time is when things like the debt ceiling are actually taken seriously. Like, the thing that you actually want to be paying attention to, in my mind, are unemployment numbers, job losses, the housing market, the strength of the consumer. Everything else is noise to make markets do whatever they want to do. And if something unexpected does happen, which I don't even believe that COVID was unexpected, if you want my honest opinion, then you start to pay attention to what? Well, you start to pay attention to what they're doing, right? And you start to pay attention to your signals because they're going to tell you what they're doing, right? Everyone at this time in 2022 thought we were crashing. Then we got a weekly divergence. And I started to be like, yeah, I'm going to buy stocks. Then everyone over here during my, when we first opened the YouTube channel was over here. It was like right over here. We started that YouTube channel right around my birthday in August. We were going through a pullback. This was a pullback. Everyone was talking about the market like it was crashing. We called the bottom. It was like one of the first times my channel actually got some viewers because we just called the bottom with our regular skills. So what are you looking for here if the war is going to be really bad? A weekly higher low, a weekly divergence, and it's probably going to end up going up. I think it's all an excuse to raise debt ceilings. That's how I believe it. And you just, there's too many things to say that it's an accident. Oh, it's an accident, but rich people got richer after the war. Oh no, another war, but the rich people get richer after war. I think it's a scary, scary excuse. It's really scary. But unless we are seeing physical US soil get hit, or physical US something get hit, physical something that causes consuming to be disrupted, right? And other things to take place, right? That's more what we're looking at. Like, you need it to be actually bad for the United States for it to be bad in markets. That's how I see it. Oakland's shouting out 10:30, a little bit of a troublesome time here in about 7 minutes. What do you mean reverse? What do you mean reverse, though? Head down? We'll see. I think it really depends on what you get to in 6 minutes. Well, you would also say what? 15-minute roll, right? 15-minute is still negative. So if you took that trade, right? We talked about 30-minute. If you're taking some kind of swing up to a daily expected move or something like that, well, then right here is where you reject from. You got to take this out. So if you can come up to here and then you roll, you would hope that buyers, that's pretty strong buying. So I'd be surprised if we completely roll the move. But I wouldn't be surprised if we do something like this before going higher. But be open to what? 15-minute coming and testing that low before actually heading higher. If you're not able to curl up right here, then you're in trouble, right? But if this 15-minute would roll, that trade is most likely not going to work out. Most of the time it won't. And then if it just rolls back up, right? So the MACD rolls, then it rolls back up, you're just right back in the trade. Right, 30-minute, 15-minute charts, they're not going to be the best for 0 DTE, if you are wondering, if you're one of those people trying to take those. It's not going to be the best. It's going to give you that direction, and then you need to do your homework in the shorter time frames to find one of those legs where you can make money. Just so you're aware. You can still utilize the information to know, like, hey, is the 30-minute crossing up? Are we at serious risk of losing lows and lows and lows? Or is it looking all right? Well, if it's looking all right and we show a new high here, you're just looking for a little higher low on like a 5 or 15-minute. And then you find that little trade in there. I'm not the best at executing those trades, but I know how to point them out. I'm really not. I'm not the best. I try to be as honest as possible on this channel because I'm just like, hey, some people will tell you they never lose. I've lost. It's fine. Some people tell you, hey, I'm good at everything. I'm not good at everything. I don't believe people can be good at everything, to be totally honest. So I'm not one of those people who's good at 0 DTE. I usually, at least to make a successful trade in a shorter time frame, have to do a 1 or 2 DTE, and it works out for me better. Just accurate. Yeah, Mr. Orange, we're trying to be that. We're this guy, right? You know what guy we are. We're always this guy. So when it comes to war, right? War 3, World War 3. I just look at it like this. How many times have we heard World War 3 in the last like 2-3 years? Might come. I think we're at higher risk of a potential like I think you might have risk of like a civil war over a World War 3. Wolf 2 hour could be fun. Let's go look. I haven't looked at Wolf in for. Oh, whoa, Wolfie boy. Wolfie boy, what are you? Wolfie boy. This is trying to raise that floor. Consolidate. And probably pretty tight. Like I said, if it's tight, you can always do this. You can pull up those Bollingers, see if it's nice and tight. It's trying to get a big expansive move. You're seeing the daily scale get tight. So it's probably going to go through an expansive move. This is actually leaning towards what? I was talking about AMC and GME, and I'm just like, I think we could see some random squeezes. And what causes those squeezes can be liquidity in markets. Like, it can be margin calls in markets. It can be a lot of different things. But yeah, I think it's super interesting for this to get tight right now. Yeah, I think that's real interesting. It looks awful, but you have daily divergence. Yeah, I don't know. Wolfie Boy might try something. Wolfie Boy might try something, my dude. We've been over Tesla like multiple times. I still have the inclination that Tesla is going up. We've looked at it multiple times now. I still think you could get a test of the weekly expected move. I think a little bit lower than that. I think you could get like 343, 345. I stutter. What up, Chris? No, it's difficult because they're always throwing something new at you, right, Mr. Orister? Sorry about that. Yeah, they're always throwing something different at you to try to fake you out. That's why a good guideline are just your expected moves. That's why the SPY and having this little blue line is such a good thing for this week. That's why Meta is so good to pay attention to this week. I believe it's even like Microsoft, if that made one more upward move, that would be good to pay attention to. A lot of big stocks are starting to say, we're getting tapped out, like on the monthly scale, to where the percentages are no longer going to be with you, right? So we're still watching, we're still looking, and we're looking for the trap. Now, there was one piece here that I could bring to your attention. I think it was this. I'd have to find it. I need to start saving stuff or clipping it or whatever. Okay, here we go. Recent reports indicate heightened tensions and speculation about the U.S. involvement in the ongoing Iran and Israel conflict, with some sources suggesting potential U.S. military action as early as Thursday, June 19th, 2025. Here's a summary based on available information. We know that we are going into OPEX. We know we are going into quad witching OPEX, which means the blue line might be more important than the yellow line for the SPY this week. And so if we're able to go up today into the end of the day, and then you get some potential war news that is used as an excuse to shoot you down on Friday, you can start that reversal process on Friday. Do you see how risk starts to get heightened today? That is a piece of news I've been reading in a few places. And you lower 2 hour lower high confirmed for NU. Ooh, that's a roller daily. That's a roller. This might go down into, you don't really have much here. You're looking right there towards like $11 to $10, or no, $11 to $10.50. It's pretty crazy, but the area that you'd want to get to is right here. You don't really want to lose this. This would be bad. And so what you're looking for is this to be some kind of ABC move that cuts it short, right? I don't know if you can get an equal move here. Equal move here is fine. So what you're looking at now is potentially this is a weekly pullback taking place. Hasn't rolled yet. That's a good thing. So you're looking for the weekly retest. Where would that like to retest into? Right here. So right at like $11. What are you paying attention to? Probably 2 hour. You are still probably paying attention to 2 hour, and you're looking for the time where the daily is going to say like, hey, I'm going to try to bottom. What you're looking for is potentially like this. Yeah, you want an extended move down. So maybe you react up slightly here and then you roll it, right? To give that like that extra lip. But either way, you're looking down here and you're going, okay, I'm looking for 2 hour divergence like right here. And then we could figure our stuff out towards the end of, that was June actually. So that would be quick. That would be really quick, but it's already daily pulled back. So it can be quicker for the ones that have already daily, right? It's kind of like they're early to do it. Really would have liked to see that. This would have risen that floor. Right now, you're at risk of doing that ABC move, and then you figure it out. See if it extends. This looks funky to me. So if you lose the zone, you'd be going like this, and you're testing those lows. So if you lose this zone, watch for rolls. You better hope for higher lows or divergences if you lose that zone. Right? Just because there's a zone doesn't mean it has to hold up there. It can literally make a 2 hour divergence right here and be fine. But you're looking for that 2 hour divergence at any point, and you're looking for that close to the center line. The closer to the center line, the better. You see something like this, and it's nice and close to that center line. So when it curls up, you're like, we're going positive. But I don't know. And this could turn around a little bit sooner, it seems, than something like Meta, right? Meta's going to need to take some time because it's still up here. And you've already done it. Yeah, you lost it. lost it, retest, lost it. Then you just went sideways. How would this turn around, right? If it just turns around right now? Probably 30-minute chart. God, internet, stay with me. Stay with me. If the 30-minute chart can curl up and we could just show a new high from this one, then that would be a good thing. Yeah, you just don't want it to like continue and then roll, continue down. This is a roll as of now. You're just looking for, does that violate it? Okay, trade setup. Yeah, we'll look at this as well, but this is where the tool will really help you. I'm gonna make the tool where you can just like pretty much download a spreadsheet that has, or at least learn how to set up a spreadsheet. That way you can make weekly expected moves and monthly expected moves for any stock, and then we can talk about those together. Why did the indexes jump? I don't care. We said 598 retest was very probable. We said that from Monday. Boom, take out that high. Oh, watch for 598. We go down to 597. Then you curl up. So I'm still seeing, hey, do we see the breakthrough kind of moment? Do we roll it? What takes place here? Yeah, Nathan, as far as news goes, like you're going to see something confirm, the people are going to tell you about the news, and then later on, if you're not paying attention, then you'll be asking what the news is. So you're already like 2 steps behind, just so you're aware, Nathan, okay? We're trying to show off technical signals to show you how we can see how momentum is moving, and you can be in before the news and you don't really care what that news is. I have not brought up like news of why this will curl up today at all. I think that we curl up today. If you want my why, I think that we will go up into the end of the day or stall out and see volatility and then go up into end of day on Wednesday, being today. I think by the time we're talking about things like Friday morning, we can see some kind of gap and fade. I think by Friday morning, you can see a lot of things. I just think that Vixpiration is a better thing to pay attention to as a trader than because Vixpiration directly ties to rich people's money. They don't care. They want war. Rich people want war. Right? They own all the stocks. They own all of like not just not just your tech stocks and the ones that you like and your little SoFis and your DJTs and stuff. They own oil stocks. They own gold mining stocks. They own those type of things, right? So they don't care if a war happens. They're still going to be just making money, and you're going to be freaking out while they're still holding on to their positions in some way. Vixpiration is just it's where you get the rebalancing of VIX options. So you'll see heightened volatility around those weeks. So the last time, oh shoot, the last time we had what's the month? It's June. The last time we had Vixpiration was actually not too long ago. It wasn't terribly long ago, right? It's just a month ago, right? So you look at where you ran into, say, Vixpiration for May. Yeah, May, we're in that. You look for that and you go, okay, what happened around Vixpiration? Oops. There's your Vixpiration. There's your Vixpiration. Uh-oh. Look, pre-Vixpiration. All right, let's look at this. Pre-Vixpiration, we saw that crazy dip down. Pre-Vixpiration, you're seeing what? Crazy dips down. Then you go up. Then you set the trap. That's a lot of what can happen. It's a rebalancing thing. So usually it's like going into Vixpiration. If you're up, you look for those spikes down so that they can rebalance volatility for the time being going into Vixpiration. Then they do this, and then they have to rebalance that whole thing. So you can see it before, you can see it after, but the important part is volatility low before Vixpiration? Then you're probably going to see a few pops. If volatility is high before Vixpiration, you're probably going to see a few drops in volatility, which means the inverse for the stock market. And this week is a very interesting week. Okay, Shai? Because you not only have Vixpiration today, but then you have an off day tomorrow. And then after that, you come right into quarterly OpEx. Uh-oh. That doesn't sound good. Exactly, Daniel, but we can point out those manipulations. If we understand that, we can still play the game. The interesting part will be, what do markets do if the game ever changes? Like, really changes. The game's slightly changing, right? The dark pool, like, right, off exchange getting bigger than lit exchange. That is a big change. Yes, you are correct, Mr. Joshua. I believe, well, here, if you want the actual data points so you guys can see it, Fed interest rate decision here at 1 p.m. my time. That is 2 hours before the close if you are not my time zone, right? But the FOMC economic projections, after that, we will get at 1:30 the Fed press conference. So those are the 3 events that you're kind of looking forward to today. And we'll be live for that. We're going to leave the stream up most of the day today. Actually, all day today, pretty much. Okay, awesome, Shy. I just wanted you to be aware of kind of those rocks in the stream, okay? Just in case you have some positions and things like that. Of course, Mr. Joshua, I just wanted to show it so everyone can see it. Let's go check on our buddy. Woo! Come on. Now, a lot of this. Let's talk about something here. Let's talk about Jay Pizzle and when he comes out and talks, and what likes to happen in markets when he comes out and talks, right? Down here. Most of the time, you will see some kind of reaction. Then you'll see like, okay, we're going to stall out, right? A lot of the time, you don't see dramatic things up or down until that actual announcement, that actual Fed press conference. So just be aware of that. You can trail up or sideways or kind of bounce around in the same area. We can continue to just go up, down, right? So up, down, up, down, up, down until we get to that point. And then we see those reactions, and then we see the real reaction after he's done speaking. Right? The last time it took you into end of day. Right here. End of day, you saw upside, and then the next day you started to gap up and see some upside and then got a pullback. So you're looking for a similar scenario now, right? You're in the same type of look. You haven't necessarily shown the best pathway higher, but you have shown somewhat of a pathway higher. So if you're bullish on, you want this to extend into next week, then you need to see a major move like this by Friday close. And then you need to see potentially that pullback next week and then set another trap by the monthly expected move at the end of next week towards the end of June. Okay? That's how this goes. You can extend the move for a bit of time here if you see positive enough price action. But as of right now, what is it that we're paying attention to? That's how it continues. That's what we're aware of. But as of right now, if the 2 hour just goes like this and then crosses back down, that's not necessarily a good thing, right? Now, you want the 2 hour to go like this. It's more the 2 hour chart, not necessarily, 30-minute exactly. You'd want to see like, bam. Yeah, straight up into the end of the month. I think you're more at risk of just seeing this and then flopping that move. Meta is your hint, I think. I think Meta is your hint. And I think Meta is saying, yeah, we can do that FOMO look, and then it's just done. I do genuinely believe we're going to start to pull back like next week until signals tell me otherwise. Exactly, Mr. Oyster. Nvidia could have some left in the tank. Right? We see Nvidia could do what? Scream today, fail tomorrow. We also see how it could raise the floor, continue to do irrational things next week. Right? But the big thing here for Nvidia is it's never been able to get to its monthly expected move. So if you really want to see Nvidia be good, you want it to go bam. You want just a big move right now, raise that floor so we can continue into July maybe even end of June, and then we actually set up that top again. But for now, Nvidia's weakness and momentum is so bad that you really want to see it. Like, the only way that Nvidia solves its problem and continues to go higher here, to be honest, is that melt up stupid looking price action where you just do this, right? Or you just go boom. You have to boom. So that's how it stands for the time being. You need to see a squeeze for Nvidia to continue. You need to see a squeeze for Meta to continue. You need to see a squeeze for Microsoft to continue. There's some vulnerable ones. On to gold is it's kind of a, I mean, maybe we want to look at like futures for this to get a better idea, like a little bit better. And you'd say, okay, the 2 hour curls up. Well, the 2 hour is very likely to get what? A lower high. So just be aware of that. It's pretty negative. If you look at, say, 4 hour scale, you're just going what? This is a pullback, right? So for the time being, this is reacting right into where you want it to, right here, right there. That's where you want to go to. First level to watch. That means gold could see an upward move on the 4 hour. So as far as GC, like futures goes, it looks like we're about to get another 4 hour move. As far as it stands, it says we're not going to curl down this daily chart, is what gold is suggesting if it's able to curl up on a 4 hour chart on gold futures. If you look over at GLD, you will see that that would be a move that takes you outside of the monthly. A 2 hour move that takes you outside of the monthly. So what are you watching for? You're watching for 4 hour divergence on GC. You're watching for 2 hour divergence here for gold. What you would want to see for gold to raise this floor. Squeeze to that weekly expected move. Squeeze up again. And that can take you potentially even into mid-July, and we'll see what happens with this. I don't know if you'll get to weekly. I don't think you have enough time for this. Is that even the right level? Gold really has that amount of volatility? GLD, 325.93, 306.65. Yeah, it's got a pretty good amount of space here, actually. More space than usual. So option traders are expecting big things from GLD. It would be really funny for it to hold flat this week and then get a reaction next week. So you just like theta burn gold contracts. Go check on our buddy. This is one of them we're looking at. Ooh, no. You got to go better than that. Remember, the management for the trade is if the 15-minute rolls here. If you want to get super technical with it, you can look for like a 5-minute lower high. But the 15-minute just rolls from right here. That's the bad one. That's where it goes bad. Now, this means even if it does this, it's fine. You just don't want it to fully roll that in some way. That's like a loose way of doing it. If you wanted to just do stop here, this is a way to be like, hey, that stop's going to get taken out. That's all it is. It's to get you out earlier so you don't give as much money back to those rich people. Tesla, nice so far. Needs to see more. Amazon, nice so far. Ooh, gosh, that... Once again, you don't want things to roll right now. I don't think you want things to roll right now. I think you want to just go up. You start rolling right now. I don't think it's a good recipe. What's going on with the Googmeister? Google, for right here, it's trying so hard. It really wants the 2 hour move to the upside. You can kind of see like the 2 hours kind of like, hey, I just really want to try for it here. We dipped into a great level for the time being with this. So if you lose this, it gets a lot more risky. I would say if you lose a lot of this, it gets risky. But if the 2 hour can just curl up, you're looking for this kind of move. It would be nice, like if we extend into next week, something like Google would be good to pay attention to. See if we can extend into next week and then we go through something bad. The timing's just a little bit different. That's kind of what Google is suggesting, but Meta's not. And I'm kind of believing in Meta because that was a really strong stock for a while here now. So I think you have a high probability for Google to see some kind of upward move that just creates that quick divergence point by Friday close. If you're able to break through and wipe out those divergences, you can continue. You can make 30-minute divergence. That's why we pay attention to how we're wrong. Okay, you're not at a monthly expected move or weekly expected move yet. So if this is going to top right now, then you're going to roll this, take out this low, and head down into these areas. I don't see that yet. I don't see that yet. Looks like that 10:30 time didn't cause any disruption, but those are the windows. I know why Oakland Group's paying attention to it. If you're a day trader, you pay attention to the 30s. Right, Oakland? Are you a day trader? Oakland, you're a day trader, aren't you? Yes, sir. Told you. See, once you're timing, you're a degen. That's awesome. Degens can work if you degen at the right time. I'm not the best at executing those, but yeah, once you have time and market enough, and you start to discuss things with other traders, you'll be able to point out what they like to do. So you probably tell from my analysis that I'm not the biggest zero DTE. I like my 2-week options, my 4-week options. I hope volatility increases. God, I hope volatility increases for July. Oh my goodness, I hope so. Let's go look at volatility. Volatility losing the trend here. Very nice. What am I looking for from volatility? Boom. Down, down, down. Into what? Up, up, up. Into what? Potentially down, down, down again. Into what? Uh-oh. Up, up, up. So as of right now, I'm still looking for the same 2-hour pullback. And I think we're going to use this as a shoulder at some point. And I think you will see this break down. From the look we have now, things can change. But I think the 2 hours is going to get down to these type of levels by Friday close. Then you're going to see it start to whip back up. Then you're going to see new high. People think it's a low. People think it's a bottom. Then you see that curl up one more time, and then we have volatility fully back into this market above 20, and we can do some of those private streams in July where we can make tons of money. Oh my goodness, it's going to be so much fun. Yeah, if we get heightened volatility in July, we should have some fun plays, and maybe by the end of the month, we even see a bottom, and we get a play a lot like this down here. So I think in July, we're going to see either moments like this or moments like this for sure. You're going to get some kind of bottoming signal. So this was that 2-hour higher low that we called out, and it happened. If you're looking for another one of those, well, you're looking at that daily pullback and saying, give it to me, right? Give me it here. Bam. Okay, you want to be more aggressive. Okay. Give me it here. Bam. Right? Give me the 30-minute divergence here just like the last time. I'm down. Yeah, I really like how this is shaping up for July. I hope it happens. Release then. I think you have to be open to it extending into end of June. Technically, you could be open to this extending into, say, like the week of July 4th. Okay, day traders really can take over during those weeks, like during the week of like July 4th and things like that. Day traders can really take over. Like zero DTE can dictate a lot of the market at that point. So you do have the opportunity to like hold up better for a moment, but on the equal side of that coin, right? On the flip side, you do have the opportunity for that extreme volatility just to come in right away. So I'm paying attention to risk. I'm paying attention to any time we confirm a bad signal. Really? Cisco. Just Cisco? Oh, Cisco. Let's reminisce. Should we reminisce for a moment here? Let's go reminisce. Where am I looking? I need to go like weekly or something, or like a monthly chart. Let's go reminisce. That's fun. That's a lot of fun. That's so much fun. Remember that, like, I don't know, it was like a bubble. The monthly here, I would just say the monthly could pull back soon. I don't necessarily think like, I'd have to look. Weekly chart kind of suggests it's possible. So if the weekly is able to roll here, it's bad. But overall, this is testing the previous high, just like the market is. So let's really see if the daily says that that's probable. The daily says a weekly curl down is probable. It can happen. But until we lose critical levels, well, one, the most critical level being what? This low. You don't really know, right? And around that time, what are you going to do, by the way? A lot of people say, like, they get mad when you're like, hey, you don't know that this is going to happen. No, you don't. And you don't either. Nobody does. Nobody knows where a stock is going to go the next day, like fully at 100%. They have probabilities and reasons to believe that a stock is going to get to a certain price, and they might execute and try to make a trade there while they're at a higher probable level. But they don't know 100% that that is going to happen, and neither do you. So if you're going to see some kind of bad thing here, you're probably going to end up losing this low and then creating a right shoulder that turns down again. Left, head, right shoulder. Lose the low, head lower. Lose the low, bounce, head lower. Lose the low, let everyone get fear-mongered into thinking it's crashing all the way down. Then it bounces where they say, oh, it's bottoming. Then you actually curl down again, and all those people are wrong at every step of the way. Now, what is the area you want to pay attention to before that, because you're not an idiot? You want to pay attention if it holds up better. It's still positive. It has divergence, suggesting it can curl down. Right there. You lose that zone, it starts to open up way more probabilities down here. So what do I think takes place? Boom, into boom, into boom. And then we see from there. And I think you could even go take care of gap if you wanted to. I just don't want it to lose this zone and reject from this area and turn down again. That's how you go lower. I want it to figure its stuff out in this zone. I will leave it there for you. As far as price goes, if you want the price for that, maybe you're just listening in or something, the price for that would be 60.64, somewhere around there. It's like a similar look to the market. You see how that block almost looks like this one. All right. Really, if we want to be bearish, we have to lose all of this. But I'm going to pay attention very critically to like the near term areas. She doesn't want to perfectly time it. It makes her way more suspicious. Who's that stock? It's this. Didn't know a crash was soon when you reached the top. Longs, 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 longs. Hey, that's good. I think, like, right, I'm not taking squeeze off the table. We're not at a monthly move yet. I'm just going to be heavily critical of the quarterly expected move until we see new ones. And I think within that quarter, you could see a daily pullback and hit the upside quarterly expected move by the end of the quarter. I genuinely believe that. Richard, stop it. You sound like lotto stocks. Remember when he said like 2 weeks ago that the market was going down to 570? And then he said like last week that the market was going down by 570? And he was like betting on it. What were we saying? We were saying this is very possible. Just that grind. Pretty funny. Jerry Sein. I actually watched Seinfeld. I don't remember one episode. I watched Seinfeld like my parents, I think, would flip it on, and I don't remember one piece of it. The reason that your meme people out there, your meme YouTubers would like to see the market go down is for margin calls. And they believe that a liquidity crisis, which is kind of correct, there would be a shortened amount of liquidity. So the market would have to pull back in some way for liquidity to, one, pay for the problem, right? The short sellers who own stocks in the market would have to sell those because they use them as collateral. That makes sense. The other side to that is just low liquidity in markets because market makers are going to have to pay for everything that's going on if it were to take place in some short squeezes. That's what it takes place. It doesn't have to be It doesn't mean like, oh, we're going to see just straight down. It's more like you could see moments of down and then go up, right? You could see something like this for a period of time. I think this was going to happen regardless, though. So his audience are people trying to get rich quick, not really trying to educate the average investor. Yes, there is very, very little to learn from those videos if you are watching them, just so you are aware. And that's not me trying to hate on someone. It's just that's the truth of it. And I'm someone who says the truth, whether it offends you or not. That's just how I've been for pretty much, you know, at least half my life since I was like an adult. I just kind of say it how it is. At least I try to, as much as possible, right? Try not to put myself in some kind of bad situation or something like that, but still. I want to see that 2-hour curl up. That 30-minute is hesitating, but I wonder if you're just like flagging on a 5. Yeah, flag on a 5. You're very likely to continue. Very likely to continue. Even if you pull back, you'd have to lose this low to start talking bad again. Any better? Much better, Joey. Thank you so much for asking. Much better, but it kind of it's like a ebb and flows. It's kind of like really good day, like really good day on Monday, really bad day yesterday, like really bad. And we had a huge thunderstorm. That's why there was no video. Losing power left and right. Half actually this morning, like I think it was like 20% of our city just didn't have power. So I'm actually very fortunate and lucky right now to be with you guys, which is awesome. I was going to be bummed out if we couldn't do this today. $80. 80 bucks. Add another zero to that. Have you seen those? And they're always one-time payments. Watch out for one-time payments for things like Discords. Like something where someone's trying to help you over time. Yeah, I would just watch out if it's like a one-time payment. That's another honesty moment, right? All right, 10 a.m. You guys, we're hitting 10 a.m. here. So what we're going to overall do here is I'm going to go do my regular thing. I'm going to go to the gym. We did look at SoFi earlier. We can do that briefly just for you real quick. I don't mind. As of right now, SoFi dipping down right into the gap. Very, very nice. Higher low for the 30-minute trying to get going. This is very likely for SoFi. So look for if we can leak this into next week. Boom, boom, boom. Or just drag that out higher, then come down, then go back up and create that reversal signal next week. But be heavily aware that risk is very heightened right now. So you don't have to make a 30-minute divergence. You could technically go up into down into more down if you just see a little lower high from the 30 minutes, some kind of retest lower high. Just be aware risk is heightened after, like pretty much today forward, risk is going to be heightened for finding some kind of trend daily top is what I would call it. And then the big boom into 2026 is what we're going to look for. Man, unless we actually go through something really bad. And the signals will show us that. But so if you want my overall assessment on SoFi, it's anytime the 2-hour crosses up, and then anytime the 2-hour crosses down. Boom, boom. We can leave these things up if you'd like, so we can come back to them later. Right there. That's what I'm looking for. And you notice that could take you into Friday at the open. We could extend that move further into next week if we wanted to. We could extend that into Friday close. The big thing for it is just understanding. If you're long on SoFi and you get to this area and the SPY is getting to its quarterly expected move on today, like if it gets there today, it tells you that there is extreme caution from that point forward for SoFi. Can it squeeze? Yes. Will it squeeze? Nobody knows until it's happening. All right, so if this is able to just squeeze and you don't see that ever confirm on the 2-hour, if this never happens, then you're raising the floor and you can continue to do crazy things. All right? What you're looking for are signals in stocks that show you that they want to pull back on the daily time frame. And that looks like something like SoFi could do that. No divergence on RSI. Slight divergence on MACD. So extend the move. Extend the move and we don't have to talk about it and we can revisit these levels later. Extend it and we can just daily pull back like this. Or just go, keep going, right? If it remains positive and keeps curling up, keeps reacting off the 5, the 9, and just keeps curling up on a 2-hour, then it's going to continue. That's just how you treat things. But yeah, 2-hour divergence is what we're looking for. So for the SPY, we can draw this out as we leave. Let's do 30-minute chart. So there's two things we're aware of now. As of right now, we're looking at this blue line. As of right now, the path here would just be, okay, we're going, and then we fall. Now, I don't think this would all take place on Friday, just so you're aware. I think you're going to see some chop on Friday, but this is potential. The only other way for this to go is you doing this. You continue even higher. You come back down. Then you go up again, potentially getting towards that monthly expected move. So this would be bam, bam, like wham, just a hammering. And then you actually revisit these levels on Monday, maybe going into Tuesday. And then you actually head up. And then you actually start to collapse. So these are the two kind of scenarios I'm looking for. We'll mark this one in orange or something so you can see it. This one is your red one. So that's your bad one. It's kind of hard to see. We'll leave it in blue. Maybe like a light pink. Bam. There you go. These are kind of the two scenarios. I'll kind of move it so you're aware what could take place. This means we just go up into OPEX as well. These are the two ways I see the market being able to pull back, correct itself for a little bit, get like a little 5 to 10% pullback. This is how I see it. If we go up to the monthly expected move, you're looking higher up. If you go with this and the 2-hour just goes up and curls right back down, you're looking still here, but you're open to this as well. You're open to it in both scenarios. It's just this pink one is where you're more open to it, okay? We'll see what takes place. Enjoy your jazzercise. There we go, brother. Back Friday. Well, we're going to leave the stream up for you guys here. We're going to, actually, if you can't, I'll screenshot this. This is kind of what I see for markets right now. That's how I think we would set up a top in some way. Doesn't have to behave like that at all. So we're going to take these off. And the move we're looking for is the next upward move for the 30-minute. As of right now, no new high. So you really want to see that during, probably before the Fed, but we'll have to find out. All right, guys, I'm going to hop off for a little bit. I'm going to go get to the gym for a moment here. I'm going to go have some lunch and then I will be back. But the stream will still be on if you guys want to hang out here. YouTube dollars. I don't put ads like during the stream or anything like that. That's not the game. You know, that's not the game. The game is to give you guys an area today to hang out in. So leaving the stream up does help the channel if you would like to hang out in here throughout your day. And we should be back by that Fed announcement in a little bit. All right, guys, I'm peacing out for a bit. Talk to you guys in a little bit, okay? But you guys are welcome to hang out here and chat amongst yourselves. Say what you're seeing. If you're someone who took the course and you've been doing things really, really well, maybe I'll even put this on a 15-minute, okay? See if this 15-minute is able to curl down. Management for risk can take place there. All right, guys, peace out. See you guys at the Fed, and if you want to hang out in here, you are welcome to do so. People who are experienced, please help people out in the chat if they ask questions, okay? Thank you, guys. Freaking do it, Josh. I will scroll back through this chat and I will ban you. No, I'm just kidding. You can talk all the shit you want. Go ahead. See you guys. There you go. All right. But a little too close to the sun. I love me some Arrested Development, man. I really do. As of right now, it seems like some changes since this overall took place was, hey, we pulled back into some areas, but overall did not beat this low. And we look like, hey, we weren't able to beat that high. So there is some risk of being able to turn down for this 15-minute. Can the 15-minute reject and go back to that upside? That is when you say, okay, some volatility before, some volatility after we get that news. And as of right now, I haven't even checked out what exactly we did get, so I need to go see that real quick for myself. I just wanted to make sure to hop on right as we were getting some of that data. This is wrong. Something's messed up here. Let's see. Breaking. Holy crap. It's almost like there's a 99.9% chance of this. The Federal Reserve has not cut rates, keeping interest rates the same. Wow. Oh my gosh. Groundbreaking stuff. Yeah, I don't know. What's the hawkish bits you get from that, Connie? I didn't read any statement, or I didn't even read anything, to be totally honest. What's the hawkish part of that? You know, what's the hawkish part? That's what I'm wondering, right? Waiting to see what the data. Yeah, we're just waiting to see, right, Willow? We're just waiting to see. Oh, okay. See, Connie, now that's what it is. I haven't read it yet, so I'm glad you were letting me know. This guy turns around right here, right? We turn down on the 30-minute. Maybe we even turn down into this type of area. We'll look for areas like this. If you don't want that to turn down, you want this to turn around right away. As of right now, for the 2-hour chart, we have still failed to cross up. As of right now, we can see that the 30-minute is trying to make some kind of trend higher or low, not necessarily shown too well by your MACD. But it is trying to form that. We're seeing if we can head up higher, right? Higher would be a good thing. If we're going to head lower, you're going to see this break and not make a divergence or anything like that. If we make a quick little divergence here, that would be super interesting. That would be very, very tricky. You'd be like, hey, we made a lower high. We took out the low, so we're going to continue, and we're going to see a sell-off. Oh, but then we catch ourselves with a divergence, and we turn back around. That would be crazy. Maybe this does leak into a little bit of next week. We'll have to see. For the time being, though, looks like we are going to be sitting around waiting for Mr. J Pizzle for Shizzle Dizzle for a little bit. So let's go look at volatility. Volatility overall still reacting off of semi into that trend. But as far as volatility stands, you know, if you're considering price action moves, that's not necessarily a good thing. So if the 15-minute is able to roll here and you lose that 5, you can actually see what's going on here, right? This, and this. Can we go up, block? Right? Yeah, let's just do it the right way. Come on, guys. Come on now. Ooh, do you see what I'm saying? So if you're able to, you know, confirm new lows here, this can be a bigger rejection than the last time, and this can actually be a bigger move down. But overall, for volatility, we're still looking for the 2-hour to pull back. You are seeing reversal signals here suggesting that this could even be a double top, and we could see a daily move to the downside for volatility. Like we could see a squeeze into the end of the month. I'm still inclined to pay attention to if that 2-hour comes down to lower levels by Friday or Monday now, maybe even, you know, Friday or Monday, or even today, right? If that pops off. But if that 2-hour pulls back and then goes again, because right now you do have some double toppiness that looks like you could shoot down a daily chart, meaning we might actually want to set up something else here towards the end of June. That is a possibility. I don't think you'll see me trading that too much because, well, I'm back. You guys know I'm back by now. I don't think you'll see me trading that too much just because I think there's just like, oh, do I want to do this over the weekend? Do I really feel confident holding a call over the weekend saying that we're going to continue this move for a bit of time? Right? I don't think so. Not at this point. I think that the way easier trade to execute, whether we do this first, which I don't think this one would be bad, actually. Like if the 2-hour curls up, the 2-hour curls up and you go, and then you look at weekly and you just say, okay, I'm out. But for the time being, it's just like, okay, are we going to do this first? Or is this just going to be one little pop up to here and then we start dropping? I think the easier trade to execute is going to be whenever we see this shape. And that's why I'm going to keep it very, very simple in a lot of these. This means for this video, right? This is supposed to be the public-private stream where you get a hint of like what we're going to do. So now you get to hear my suggestions, right? You get to hear some things that I am doing. And I, myself, am just going to sit back, relax, and play the patience game. Yeah, I think playing the patience game is a perfectly fine thing to do in these areas. You could say, "Oh, you could see markets scream up and go to all-time highs and get caught up in that FOMO," but at the same time, you're just like, or, or, what if I just be patient, have a nice Fourth of July, see if some kind of pullback comes, and then be like, okay, cool, daily pullback came. It's very, very likely to happen. So. Were you guys nice in here while I was gone? Do I need to read it? Do I need to read through the chat and make sure you guys were being nice? Huh? Huh? Fed Jerome Powell too slow? He's stuck between a rock and a, or, you know, what is it, a rock and a hard place or something? Yeah. No, don't, Mr. Josh. Good. I'm glad you guys were playing nice while I'm gone. A little too close to the sun is the part that I like. Lucas, are you still waiting for the trade of the year on that eventual pullback? I think so. Well, really, the trade of the year might already happen. I still think a better one is coming. When I say a better like trade of the year, what I'm talking about is you already had one. There was multiple like good trades as far as shorter time frame goes, but bigger time frames, 2 hour curls up, 2 hour goes to resistance. That is just a great trade. Literally, this to this is a great trade. Then if you did your homework like we did this to this, which technically it was shorter than that. It was like here. So we got out early again, and you'd get out early here as well. But this is like very, very good trades. But you notice that this one was pretty nice. The one that I really, really enjoyed though, as far as like utilizing all of the moves, utilizing 30-minute divergence, 2 hour curl ups. This trade was the best trade of the year for like a 2-week play. And then this trade was the good one overall. Like if you're treating this all as one move, if you're someone that just buys like, 6-month out options or something, you're just going, okay, cool, I made a shit ton of money. When's the next time you're going to see a leg like this where you could potentially buy 6-month out calls again? Well, you'd be taking profit and being like, all right, that turns down. And then that curls up. That's the next time you can see a leg like this. You genuinely could see like 650 or something like that by the end of the year. Like you could just do this. Scream higher. This most likely is around that timing of the Fed announcing some sort of something towards rates, maybe in September, or something else to celebrate. I don't know if I can read into the future that much. I don't know what we would celebrate at that point unless we see deals, Iran, Israel calm down at the same time. Those two things would be pretty good. But this was the trade of 2025 so far, and you're going to get another one right here. You're very likely to get another one. And then what are you going to do? What are you going to do overall? Wherever you come down from, you're going to come down. You're going to set a point, right, to go up. And what you're going to be able to do at that time is take these little trends and go like this. And then eventually you're going to see this thing go like boop, 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 or something like that. Or we could wedge. Wedging would be very, very cool. I think you have the opportunity to extend in like sort of like a channel, like if you duplicate this. And we're just talking about fun stuff, like something like this. Maybe it's not as good. Maybe it's like here. I'm not someone who really like cares too much about I don't think I think like channels matter. Like it definitely matters, but I think something like this would be interesting. So something like this would be interesting because that means what do? We go down to here, then we go up. Probably not that fast. It's probably like this. Bam. End of July. We just go up. I don't know if it'd be that crazy. I think it'd be more like maybe. This market can go nuts. Yeah, maybe. Let's see this. Let's see this real quick. Yeah, there you go. 680. The next push could potentially take you to 680. That would be the deals are done. People are betting on America and yields are going down. This is like the euphoria. Everything's going to be perfect. And then what you're going to end up seeing is this to like go like I'm just going to place it higher. What you could end up seeing is like you react all the way up to here, then you pull down slightly, you don't get to the bottom, then you do this and you fail to touch that move again, and then you fail to 7,000. You fail 700. That would be super cool. I think that's possible. I think that's definitely possible, but we have to see where the daily gives us that trend. I actually think 700 is more possible if you just do like this, and then you go like this is quick. It's just some Iran Israel bait, and then you raise that floor like this, and this is where you're going to see a wedge. This one's more where you'll probably see some kind of wedging. What could that wedge look like? I mean, I'm sure there's like a million points you could find, right? Something like this. And then you'd say, uh-oh, we need to squeeze past there, or else you're running into bad things towards like August. So there's plenty of ways it can shape up, and we have to see how it wants to shape up over time. Thanks, Nels, for the $2. Do you have something you wanted to look at? No? Okay. We were nice. Lots of us really appreciate you. That's it, Bernie. That makes me want to scroll up there and read. No. 650 is coming after daily pullback. I think with the structure of the market, that's a way to display it. That this is a way to display just how bullish this could be wherever that daily higher low sets up. Wherever that daily higher low sets up, you're looking for another run at least as big as this one. So if you're saying by like end of July, we're going to figure it out and we're going to start to head up, you would say 650 is the next point to get to. And that's going to be a big number in people's minds. So that can be where you run into those potential resistances to curl up one more time. But it could take a drawn out long time to get there. I'm not expecting it to be something like this exactly again. I think you'll see a little bit more chop unless it's just euphoric. So I don't know. I think that's the way to look at it right now. For the market right now, though, you're just looking for potential upside into maybe even OpEx. We've really drawn it out for a while. Honestly, the cool, calm approach has been appreciated. My upside has been somewhat limited lately, but avoiding the drawdowns and the stress, marathon and not sprint. Exactly, yeah. If you can just like chill through it. If you're managing your positions correctly, you should feel more chill. And you'll have moments where like a stock does something crazy and you kind of are like, fuck, shit. Right, you'll have those moments, but that's where your positioning size comes in. You should never be risking something that's going to ruin a weekend. Not your life, just the weekend. So if a good weekend for you is going out with your buddies and spending $300 at the club, then don't lose $300 on one trade. That's kind of how I like to do it. That's why my starter position is usually what when I'm calling a top? $500. Because I think if I lost more than $500, I'd be like, damn, I'm gonna be a little sad over the weekend. And that's just because of how I grew up and how I think about money. $500 isn't a ton of money to me by any means, but at the same time, $500 is enough for me mentally with how I grew up with money to cause me to feel bad. And that's all. Right? So find that number of feel bad, right? So technically, if I'm taking a real trade, I'm my regular trade is like anywhere from 1 to 3,000, 1 to 5,000. If I'm being real greedy, 5,000, 1 to 3,000. So that means up to $3,000 potentially. I would be definitely managing a trade before then, and I wouldn't lose all $3,000 if I had a losing trade. But that's not an amount of money that's really it's going to make my weekend and be like, damn, lost $3,000. But if I lost $3,000, I'd be like, all right, I'll build that, right? We're just starting the game over. It happens. No, I did not, Willow. We grew up like middle of the road. Like I grew up, I will say this, like as far as it goes, I always think like I'm so fortunate. Like if you pretty much it's like if you grew up in America, you're very fortunate. So I was able to my family volunteered to put me through a private school, so they did a lot of volunteering so that someone would pay for me to go to private school or at least help pay for it, which was very, very nice. I wish those things would come back. That's how I think our school system should run. because it's a very good system. But I was lucky enough for that with my parents. They volunteered multiple times. They had me volunteer. We volunteered. We did soup kitchens and stuff like that. Very cool. All right, let's go check on our buddy Apple because we were looking at that one. Did that one fail? So far, it is giving you the management of the trade. So the management of the trade came in. This is where you say, uh-oh, it's starting to go wrong. Very easy bar to make that decision right here if you wanted to make it early. If you wanted to wait for a retest or something like that, that would be these bars in here. This one gets you out, right? And then you say, what? Hey, if it's going to end up turning back up, well, then you see if that thing can turn up on a 15-minute, and you can go, okay, now I'm going to try one more time. If we can beat this high, we can beat this high. I want to go. But just so you are aware, Apple is not necessarily the best stock to really try to catch this kind of move because you're in negative territory. You're in very negative trend. You do have the divergences for it. You have 2-hour divergence, so I understand, but it's very likely to do this. All right, so all you're trying to catch is like this. And that can be very complex because it doesn't have to come. You could easily just go, So be very aware that the management of the trade came in. All right, that means if you are not out of this, this is still rolling right now, and the momentum is pointing down in negative territory. It doesn't mean that it's all over. It says there is risk of making a new low. So if I took an option here, and I didn't get out of that here, here, or here, well, now I'm going to start to go underwater, like pretty heavily. More so than, say, like a little 2%, 5% loss right here if you're doing a month out option or 2-week out option. I don't know what you decided to do with that. You could also say this. A day trader probably loved this, right? A day trader, the job is done, right? Play it from here to the 5, and it's done. Someone that likes to take like an Apple contract for a little bit, hey, there's your day trade, right? It showed rejection. And if you were looking at this from a day trade perspective on managing the trade, the time to manage the trade was on the lower high. We do see that this is the stretch. Usually you like to sell that rip, but if you didn't, you're looking for the retest to go higher. Okay, once you see that, roll and start to confirm below, right here, right here, right here. All of these said get out for the time being. We are going to test the low or go make a new one. We go make a new one. We react back up into that block to retest again, and we fail. And now we're creating 5-minute divergence to see if we can whip this thing back into shape. I am still leaning towards the 2-hour move to the upside, but I want you to understand how to actually like be executing at this point. And at this point, you would be really waiting for the 15-minute to just do this at this point, right? So when we see a failure, but you do not make a new low, you are seeing if the 15-minute is pulling back to find buyers to do what? Go higher, right? Go higher is the overall assessment here. You want this to curl up on the MACD. You want this to curl up on the RSI, which means you need price action above that 9. So the fact that the price action is not above the 9 right now and not above the 5-day moving average is telling you that there is risk that we are rolling right now. Okay, so what you want to find is maybe you do like 5-minute divergence. Maybe you just want to see if the 15-minute rolls up and then you can catch a nice move like this tomorrow. Maybe that's the goal. Is catch something and try to catch a move all the way to these highs and not be greedy and catch this. Maybe that's the goal if you're a little day trader. For me, with this type of play, I potentially would be looking at Apple. I would be looking if Apple is able to whip up that 15-minute to see if we can get that 2-hour extended move. I think this is something that I would try to execute on, but I would know that there's extreme risk here. And so all I'm looking for is boom, and then I'm out. This is a very quick trade. Very quick trade. Day trader probably liked it here. If you want that trend move up to go to here, well, now's the time to see if that 15-minute does curl around because you see that the 30-minute is starting to confirm down on your MACD, cross down below the signal line, cross down below all of the 9 on the 30-minute. So just be aware of that. Good stuff. Good stuff. That's why we went over the management of the trade. We do that on this side of things. If you would like to join the Patreon to get more streams, kind of like this one, where we tell you exactly when to manage trade, how it would show that it's working out. We told you that Apple needs to make a new high here. It did not. It decided to roll from the 5-day moving average, and therefore your 15-minute did start to give confirmations on price action and the RSI if you wanted to be early with it. If you wanted to hold it to see if it was some kind of trap, well, then this bar right here would really tell you be out, look for a retest, be out. That's what was set in here. Very, very nice. Apple continuing to go to the downside now, which is exactly what should happen, unless that 5-minute divergence says something. How's that look? RSI. I don't think it's on the MACD, is it? Yeah, it's not on the MACD, so I wouldn't have too much faith in that. This is why you hear me. Playing this is not my goal. Playing this might be my goal. That might be my goal, right? Seeing if this is going to confirm on the 2-hour, but if it doesn't confirm on the 2-hour and I see the 30-minute curl up, then I just go, okay, it's going to continue. Playing this is my goal, right? We showed it off. It's perfectly fine. We just have to see what happens. This is not nearly, if you wanted the 30-minute trade here, by the way, let's go over this in the management of the trade, right, for the SPY. Well, we said 30-minute might react up, right? Good reaction up. Bam, you want to get through here. You didn't, so you have the opportunity to do what? Roll. But if this is finding buyers, then you might have managed the trade on the 15-minute on one of these bars in here or on the retest. And then you're seeing it start to get some wicks down here. So if the 15-minute just goes boom, then where should we get to? We might get to that 605. We might get to 604. That'd be pretty damn cool. Let me take a second here to pull up, and we're going to go into... Actually, we'll do 15-minute for the SPY. Let me go pull up J Pizzle for Shizzle Dizzle, okay? And if you guys are enjoying the extended stream and enjoying having the actual moves on the charts today, it's not the... I wouldn't say it's like the best timing for like certain plays, but I think on Friday we could see potential for that, okay? Let's go into, I gotta go to premium. I don't know why. There we go. Associated Press. Usually you have a pretty good stream. Okay. Watch live June 18, 2:30. FOMC press conference. Just go to Federal Reserve. FNK, I'm gonna look at it because I have no idea. Is this Funko? Are these Funko Pops? Are these Funko Pops? See, this is a lot. Okay, so let's compare this to Apple. Do you see how this is almost different? Now, it looks really bad, right? It doesn't look good here. But you're looking for the trade from here to here. Awesome. You probably have a little 15-minute divergence right there. 5-minute divergence. It just goes bam. Very, very good. But you made the new high. So what does this mean? This happened on a gap, so this is probably very difficult to see. So what is going on here? This is high potential to be happening right now for this stock, actually. So what you're looking for from this is the management for the trade, right? Okay, this went up, it went positive, it went above the 5. Okay, we're losing the 5. All right, maybe I'm done with this. Maybe it's going to pull back deeper. And then you look for the signs of it turning around. You know, traders who just use price action will just buy it here, see if it's able to make the new high and ride that bad boy. So all you're looking for is a curl up into positive territory. As it stands, if you get that curl up into positive territory, watch out for 2-hour divergence, okay? You're going, okay, if this wants to turn like this and then go, oops, that's going to be a problem. This is why I like having those moves. But you see how you've really created a great level that if you started to break down, you would see that easy play over here. That little like 30-minute cross up or 2-hour cross up that fails if it wants to take its time. So this is very, very nice. Let's look at daily scale. Yeah, raise the floor. So if you squeeze from here, it changes a little bit. You are showing your head above here. So if you want to react down into an area, you'd be looking kind of down in here. right? And you would say, we can dip down into that, but I want this to curl up into positive territory again if that's going to daily pullback. What you would really like to happen here is a squeeze in some fashion to go into here. If you wanted to mark that off as a block, I would totally understand. Bam. Let's take the low point. If I can get it. I think I got it pretty much. So what you do is mark this off. And you would go, okay, we do this. That's fine. That's still fine. Peek your head above a little bit. Ooh, squeeze it. Ooh. Then you do this. Then you do that. Or, bam, raise that floor even higher. But if you do this, you're going to potentially come all the way back down to $4 before you can scoop this bad boy back up. If you're just going to peek your head above here, bink, oh, you can go way down, right? You can still go negative here, so just be aware of that. Very, very nice. It doesn't have a bad look. Like I said, like you can try anything. It's just as long as you're confident in your management for the trade, you can literally trade anything. I've never seen that stock before. I really haven't. Is that Funko Pop or whatever? Is it? That's on APLD. APLD, and this is why I want to put that feature out there where you can calculate a weekly expected move. APLD, you're going to get a counter trend move, and that counter trend move might fail. Look at the 2-hour positioning. Yeah, you have a long way down here. Now, this is dipping down into buyers. So if this 2-hour curls up and goes positive, it does have that chance to test the high, go make a new one. But we've gone deep enough to what? We're negative with that positioning. So you notice the times where you're not negative with the positioning on, say, like let's see if there's a big pullback that didn't go negative or went slightly negative. This isn't necessarily a big pullback, but something like this happens. You go slightly negative, you can turn that shit around. And there's still a 2-hour divergence there, by the way. You turn it around, you go, right? But when you're up really, really high and you go down into negative territory and you continue to just fail to curl up, it really adds up to what? You can reach down even deeper. So if this really wanted to, this could go all the way down to $8. It does have a bunch of 30-minute divergence saying a 2-hour move can come though, right? So if you look at the daily scale, you'll start to say, oh, maybe something like this is going to take place. So maybe APLD is not safe from a pullback, but is that pullback coming right now? Well, you have a bunch of 30-minute divergences. So it's pulling back right now, but you're about to potentially see a 2-hour move to the upside that fails. So this means you could see a 30-minute counter trend move like this. You can trade these things and then you fail. But if you're able to curl up, hold that floor, get a higher low, ooh, left head, right shoulder, we can go test that high. But if you fail before taking out that high, most of the probabilities would say that you're going this way. And I think that that would be another big drop. And then you would potentially make divergences around like $8. Or maybe $10 if you're lucky. So as of right now, this thing needs to pop off and get above 1306 in order to be back on the bull. You see that your 5-day is rolling, right? So now you can see, oh yeah, we're coming back down. That is the most probable scenario for APLD right now, is to see this. This changes if you take out that high, you have a chance to make a higher low and go higher again. And this move should be the bigger one over here. So if you're wanting to play this, right, because there's 30-minute divergence, right? This stuff's confirming, it's unconfirming. Did we ever get a good confirmation actually, though? Look here. Boom, boom. This one did. Okay, so right here did have divergence. You see it curled up. If you wanted to take it when everything's confirmed, boom, to the upside. Oh, we got to beat this. We got to beat this. Nope, we tap our head and we fall. So what happens there? 15-minute just gets smashed. That's an unlucky one. And you're looking for retest into the sellers, right? Before you get out. Because if you got in here, you'd like to get out there. Now you're starting to make that base. So it looks like the 30-minute could confirm up. If the 30-minute, you're still looking for potentially a good confirmation. This one, maybe you could consider okay, but you would like to see a 30-minute bar like this, and then see that continue and take this out. And then you want to see a big move to take out 1179. So the management for the trade there, and then here will be still, do we roll the 15-minute? Or does the 15-minute see something good, see something good, see something good, take out that high? So you're looking for APLD to squeeze right now on the 2-hour chart. That means if you're trying to execute on this play, you are looking for a 2-hour trade, potentially to like 1250, like this, and then we roll. Like 1250, and then you roll. That's the trade. So that means as you get there, you want to be like, okay, 30-minute confirmed, 2-hour move took me to here. I'm done next week. Let it do what it wants to do. Everyone gets euphoric here. If you're going to stay bullish, you're going to take this out. And you're going to miss out on that little bit, but you're letting the FOMOers do FOMO things. And then you reject. You come down and find those buyers somewhere, and you curl back into positive territory if this is going to continue. But you are more likely to see a lower high from this stock at this point. So just be aware of that. What can we be going into, right? If we're going to extend the move, what? Oh, Jerome Powell's talking. Sorry, guys.
The effects of tariffs will depend, among other things, on their ultimate level. Expectations of that level and thus of the related economic effects reached a peak in April and have since declined. Even so, increases in tariffs this year are likely to push up prices and weigh on economic activity. The effects on inflation could be short-lived, reflecting a one-time shift in the price level.
Did he write this speech? Because he just said short-lived.
That the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored.
15-minute is close to going positive. Be aware.
Inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we will balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy.
With this in mind, guys, taking a pause, I want to show you what has happened. If you screenshotted this morning, look at it again. We are now up to 59. It has risen. We are up to 59% for a cut in September. The chances for the cut have just gone up. He's telling you he's waiting, but the percentages are telling you something else.
The median projection declines to 3.6% at the end of next year and to 3.4% at the end of 2027, a little higher than the March projection. These individual forecasts are always subject to uncertainty, and as I've noted, uncertainty is unusually elevated. And of course, these projections are not a committee plan or decision. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on issues related to assessing the risks and uncertainties that are relevant for monetary policy and the potential implications for policy strategy and communications. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference that we held last month. We are open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up any modifications to our statement on longer-run goals and monetary policy strategy by late summer. After that, we will consider enhancements to our suite of communications tools, including the SEP. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country.
Before the questions start, and as he sums it up, volatility really quickly, just so you are aware, the 2-hour has confirmed divergence here for volatility. That's not necessarily a big bullish thing for volatility. That's a bullish thing for the market. If the 30-minute can turn up, it might violate that. But the 2-hour is suggesting this could be divergence here. And we could see a big move to the upside if this really wants to play out.
Timing of when they will materialize in the data.
So we've had 3 months of favorable inflation readings since the high readings of January and February, and that's, of course, highly welcome news. Part of that just is that services, core services, both housing services and non-housing services, have really been grinding down toward levels that are consistent with 2% inflation. So that's the good news. We've had goods inflation just moving up a bit, and of course we expect, as you point out, we do expect to see more of that over the course of the summer. It takes some time for tariffs to work their way through the chain of distribution to the end consumer. A good example of that would be goods being sold at retailers today may have been imported several months ago before tariffs were imposed.
2-hour has
so
confirmed
we're beginning to see some
for
effects, and we
futures.
do expect to see more of them over coming months. We do
Not on the
also
best
see
bar.
price increases in some of the relevant categories like personal computers and audiovisual equipment and things like that that are attributable to tariff increases. In addition, we look at surveys of businesses, and there are many of those, and you do see a range of things, but many companies do expect to put all or some or all of the effect of tariffs through to the next person in the chain, and ultimately to the consumer. Today, the amount of the amount of the tariff effects, the size of the tariff effects, their duration and the time it will take are all highly uncertain. So that is why we think the appropriate thing to do is to hold where we are as we learn more. And we think our policy stance is in a good place where we're well positioned to react to incoming developments.
So in terms of how we should interpret the rate cuts penciled into the SEP, is this reflecting that there's this expectation that underlying inflation will just stay well enough contained that allows the committee to eventually move ahead with those cuts? Or is it about responding to a deterioration in economic activity, let's say? I mean, how should we make sense of the forecast?
So if you look at the forecast, you will see that people do generally expect inflation to move up and then to come back down. But we can't just assume that. Of course, we don't know that. And, our job is to make sure, one of our jobs is to make sure that a one-time increase in inflation doesn't turn into an inflation problem. And that, again, that will depend on the size of the effects, how long it takes for them to come in, and ultimately on keeping inflation expectations anchored.
Hi, and thanks, Chair Powell. Howard Schneider with Reuters. If you look at the rate path starting in December to today and adjust it over the full time horizon you've got there, you've taken about a quarter point per year out of your projected path, and you end at a higher rate at end 2027 than you would have in the prior forecast. Is that a result of a sense that tariffs will lead to more persistent inflation? Is it a result of reassessments of where your short-term neutral rate is? Why are you on a slower path now?
Let's see if he answers
So
this.
I would focus
well.
most on the nearer term. As you get out to the later years, it's hard for anybody to know where the economy is going. You didn't see people moving their longer term, estimate of the neutral rate, for example, at this meeting. So and those things are probably slow moving. So I think if you look at what's happening here since March, this is since March, right? You see a little slower growth, just a tiny tick up, a 1/10 tick up in unemployment, and you see inflation moving up 0.3. And by the way, it was a similar move from the December SEP to the March. So that's what you see. You see the effects of tariffs. I think we learned in April, after the March meeting, that substantially higher tariffs were likely. And then since then, the estimates of where the tariffs will be have actually moved back down, although still at an elevated level. So we're adapting in real time. And what you see is an accumulation of individual assessments.
But you say in the statement that risks have diminished on that front. But the July 9th, drop dead date for all the Liberation Day tariffs is still out there and unresolved. You've got now exchange of missiles between two Middle East adversaries with a possible U.S. involvement. How can you justify saying that risks have diminished?
So what we said was that uncertainty uncertainty about the economic outlook has diminished but remains elevated. Many surveys say that. They do. So, and that's actually a line from the Teal book, which you can see in 5 years. Remember to check that.
Maybe the war will be over.
No, but if you think about it, tariff uncertainty really peaked in April, and since then has come down. And that's really what that's just acknowledging. It's diminished, but still elevated. That it's uncertainty. So I think that's an accurate statement.
Thank you. Chris Rugaber at Associated Press. There is an argument out there in favor of cutting rates more immediately. Inflation has continued to cool and is back to roughly 2% despite the tariffs. And I guess I also wanted to ask about, cracks in the job market with gross hiring slowing, concentrated in just a few industries. We've seen some housing data, including this morning, that have been pretty weak. Do you see any concerns that the economy is weakening and that is a reason to cut rates going forward?
So we do of course monitor all those things. I think if you look at the overall picture, what you're seeing is 4.2% unemployment and an economy that's growing at a rate hard to know given the unusual flows in the first quarter, but it appears to be 1.5%, 2%, maybe a little better than that. Sentiment has come up off of its very low levels. It's still depressed. So you can point to things. The housing market is a longer run problem and also a short run problem. I don't think it's indicative of basically the situation is we have a longer run shortage of housing, and we also have high rates right now. I think the best thing we can do for the housing market is to restore price stability in a sustainable way and create a strong labor market, and that's the best thing we can do for the housing market. You asked about the job market. Again, look at labor force participation, look at wages, look at job creation. They're all at healthy levels now. I would say you can see perhaps a very slow continued cooling, but nothing that's troubling at this time. But we watch it very carefully. So overall, again, the current stance of monetary policy leaves us well positioned to respond in a timely way to economic developments, and for now, and we'll be watching the data carefully.
Well, just quickly on, given that there are concerns inflation will rise, but there is the alternate scenario that tariffs would create demand destruction and slow growth sufficiently, and that would perhaps keep a bit of a lid on inflation. Do you see odds of that scenario? What kind of odds do you see of that scenario coming true, and how many months of cool inflation would you need to see before concluding that maybe that lower inflation scenario is taking place? So
this is very much the conversation we had today and yesterday. There are many different scenarios, many combinations of scenarios where inflation does or doesn't prove out to be at the levels we think, and where the labor market does or doesn't soften. And I think what you see people doing is looking ahead at a time of very high uncertainty and writing down what they think the most likely case is. No one holds these rate paths with a great deal of conviction, and everyone would agree that they're all going to be data dependent, and that you can make a case for any of the rate paths, I think, that you see in the SEP. And we do this once a quarter. It's a hard thing to do particularly at this time, but it does reflect. If you see somebody writing down a rate path that involves cuts, that's them saying, yes, I think we will get to a place, more likely than not, where cuts will be appropriate. And it could be a joint probability of a number of possible outcomes. Again, remember how much uncertainty we face, though.
Steve.
Thank you. Mr. Chair, I wonder if you could describe for us some of those scenarios. How do you get to a place? I'm noticing that the uncertainty levels in your forecast are very high. How do you get to a place where you have the confidence in the outlook for, say, inflation and or growth or the unemployment rate? How many months does it take, and what do you want to see in the data to get to that level of confidence to actually reduce rates off the restrictive level?
So it's very hard to say when that will happen. We know that the time will come. It could come quickly. It could not come quickly. As long as the economy is solid, though, as long as we're seeing the kind of labor market that we have and reasonably decent growth and inflation moving down, we feel like the right thing to do is to be where we are, where our policy stance is, and just learn more. And in particular, we feel like we're going to learn a great deal more over the summer on tariffs. We hadn't expected them to show up much by now, and they haven't. And we will see whether, to the extent to which they do over coming months. And I think that's going to inform our thinking, for one thing. In addition, we'll see how the labor market progresses. So at some point it will become clear. I can't tell you exactly when that will be. And meanwhile, we'll be watching the labor market very carefully for signs of weakness and strength, and tariffs for signs of what's going to happen there. And of course, there are many developments ahead. Even in the near term, developments are expected on tariffs. So I think we don't yet know with any confidence where they will settle out. We have an estimate, and it's I think all estimates are now pretty close together, but it's again highly uncertain.
When you say estimate of the impact of tariffs on the core PCE, is that what it is? And could you share that?
What you start with is what's the effective tariff rate overall, and people are managing to that. But the pass-through of tariffs to consumer price inflation is a whole process that's very uncertain. As you know, there are many parties in that chain. There's the manufacturer, the exporter, the importer, the retailer, and the consumer. And each one of those is going to be trying not to be the one to pay for the tariff. But together, they will all pay for it together, or maybe one party will pay it all. But that process is very hard to predict. And we haven't been through a situation like this. And I think we have to be humble about our ability to forecast it. So that's why we need to see some actual data to make better decisions.
That was
We'd like to get some more data. And again, in the meantime, we can do that because the economy remains in solid condition.
What I'm drawing up for you guys with volatility is simply how it can come back in, how it can go down. Very simply. How it can go up, how it can go down, right? 2-hour divergence, okay, curled down. Right now you would expect, hey, the 30-minute shouldn't be able to curl up, right? We could curl up and reject, but if you make new high, it's a bad thing. So this is how you go higher with volatility, which means the market comes down. It's not leaning that way, though. The signals aren't leaning that way yet. Signals are leaning towards lower high.
Healthy diversity of views on the committee. We did have strong support for today's decision and broad agreement that our policy stance does leave us in a good place. But I would point to two factors, and you mentioned them. The first is just that parties have a diversity of forecasts. And they do align with where their dots are. So if you have a higher inflation forecast, you're going to be less likely to be writing down, more cuts. But remember, as we see more data, we're going to learn more about where inflation is headed, and that means when it is time to look at resuming our normalization process, the differences you see should be smaller because we'll have seen actual data. Right now, it's just a forecast in a very foggy time. So that's the first part, is forecast. Secondly, people can look at the same data and they can evaluate the risks differently, as you know. And that includes, the risk of higher inflation, the risk that it'll be more persistent, the risk that the labor market will weaken. People are going to have different assessments of that risk. So you put that in there too. So those are the two ways that the two things I think that drive these things. Remember, though, as I mentioned earlier, with uncertainty as elevated as it is, no one holds these rate paths with a lot of conviction. So that's really where it is. It's a function of those things. And I think as the data come in, you should see those differences diminish.
If I could follow up, you've said the policy is in a good place and that it's modestly restrictive. Given all the uncertainty you just talked about, tariff levels, uncertainty around the pass-through, is it price increases versus margin compression, some of the softness that Chris talked about in labor and housing, why wouldn't it be better to have rates at a more neutral setting as the economy heads into this period of very high uncertainty?
So if you just look backward at the data, that's what you would say, but that's not. We have to be forward-looking, and the thing that every forecaster, every outside forecaster, and the Fed is saying is that we expect a meaningful amount of inflation to arrive in coming months, and we have to take that into account. So I think a backward-looking look would lead you to a neutral stance, but we can't. We have to look at that, and because the economy is still solid, we can take the time to actually see what's going to happen. There's a range of possibilities on how large the inflation effects and the other effects are going to be. So we'll make smarter and better decisions if we just wait a couple of months or however long it takes to get a sense of really what is going to be the pass-through of inflation and what's going to be the effects on spending and on hiring and all those things.
Mr. McKee.
Michael McKee from Bloomberg Radio and Television. Your friend down at 1600 Pennsylvania Avenue continues to lob insults in your direction, and I'm wondering, given now that the Supreme Court has maybe carved out the Fed from some of the legal implications of that, whether this is just noise that the markets and everybody should ignore until your term is up, or whether you worry that it could lead to more pressure on confidence on Wall Street, on consumers about
Here
the
is the
outlook
Fed
for the economy.
crazy price action.
Okay.
Always
From my
funks with your
standpoint,
signals.
it's not complicated. What everyone on the FOMC wants is a good, solid American economy with a strong labor market and price stability. That's what we want. We think our policy is well positioned right now to deliver that and to be able to respond in a timely way as the data lead us around. The economy's been resilient, and part of that is our stance. And again, we think we're in a good place on that to respond to significant economic developments. That's what matters. That is what matters to us. Pretty much that's all that matters to us.
I need to ask, assuming you are not reappointed, would you stay on as governor when your term as chair ends?
I'm not thinking about that. I'm thinking about this.
Andrew.
Thanks, Mr. Chairman. I guess with workplace raids increasing, picking up significantly, what kind of effect would that have on the labor market
Sorry,
in the short
with
term?
what picking up?
Workplace raids.
So you're asking immigration.
Yeah.
You know, I wouldn't want to speculate. One way to get at that from an economic standpoint, we of course don't comment on immigration policy. It's not ours to make or comment on. But what you see is an unemployment rate that has been really solid and at a low level, not really increasing. It's been in a good range and well within the range of mainstream estimates of maximum employment. And that means, like, part of that is that labor demand and labor supply are kind of moving down at the same rate. Labor demand is softening. You see that in job creation, but it's still kind of at a healthy level. And labor supply is diminishing because the immigration numbers that we see are much lower than they were. So those two factors, supply and demand, that's what has kept the unemployment rate in a reasonably stable place.
Okay, thanks. The other thing I wanted to follow up on is if you could elaborate on the potential changes to the SEP that you suggested were part of the framework review, I think.
So the framework review really has two tracks, right? The first track is our policy framework that is reflected in the consensus statement. And we've said that we would finish that and announce it by the end of the summer. So we're well along in that process. We've had the meetings that we need to have, and we're now going to be going into, into discussions about, specific changes to language. So that's the framework part of it. The second part of it is our communications tools and practices. And that part comes next. Okay, that's what we're going to do in the meetings this fall. Actually, what we did at this meeting, though, is we sort of prepared the ground for that. We had a meeting where we talked at a high level about a number of ideas. The SEP is part of it. Many other ideas. It's sort of how do we think our communications can be improved? There are a number of ideas. People offer to really.
I don't care about his ideas. Real quick at the market, okay? As of right now, we're trying to solidify what? We're still trying to solidify if this is going to be our 2-hour high or low. So you don't necessarily want to lose that. Even if the market turns down here, really pay attention to this level. But we haven't lost it yet. That's still okay. But we never showed that pathway higher, so you're aware of the roll. This is why the management of the trade is something we discussed. 15-minute was able to curl back up, 15-minute curling right back down. Not a good sign as of right now. You will look for divergences to confirm after he finishes talking. If you don't get those divergences and you start to lose this, you're not going to make any divergence down here on either indicator. So be aware of that. You have officially lost that level, so just be cautious out there. But you can see crazy things during FOMC, right? We said the FOMC volatility is here. We usually say this about FOMC all the time. If you choose to trade around FOMC, be prepared to like emotionally get drained, because you're going to see whip up, whip down, whip up, whip down, and then you're going to whip down, take everyone's stops out, not lose the critical level, and maybe even whip back to the upside. This could be a stop grab for now, but it has broken the low, so we will watch it very carefully.
Inflation forecast. I think what we've learned is that, and this was long before we had any idea of what the actual policies would be, we've learned that the tariffs are going to be substantially larger than forecasters generally thought. And, we don't, our forecasts are generally not particularly different from those of other, well-resourced forecasting operations. So what we learned, and particularly in April, was that very substantially larger tariffs were coming, and that would mean higher inflation. That's what happened. And so now you saw 2.5% forecast in December, you saw 2.8% in March, and you see 3.1% now. So it's 0.6 higher inflation for 2025, and that's a big part of the change, and that's due to the effects of the tariffs that are, we don't know where they're going to land, but it's pretty apparent they're going to land higher than outside forecasters were really guessing at the end of last year.
My follow-up to that, I think consumers, right, we're looking for relief on rates when it comes to mortgages, car loans, small businesses want to take out more manageable loans. When you look at the cumulative inflation over the past 5 years, prices have risen over 20%. It's been a rough road. So what is the tipping point then for the wait and see approach in terms of how much it's going to help versus when it hurts the American consumer?
Well, I mean, we're trying to restore price. The best thing we can do for the public that we serve is restore price stability. If we can, and we will, restore price.
2 hour already rolled for Meta. You have a good confirmation. You have multiple good confirmations. So Meta 2 hours saying down. Look for the reaction of like, hey, does the 30-minute cross up into positive territory? Because that means we continue for a bit.
Without having to think about inflation all the time. So in the meantime, we have to keep rates high to get inflation all the way down. They're not very high, let's be honest. I would say policy is modestly or moderately, probably modestly now restrictive. If you look at the economy, it's not performing as though it were performing under very strict monetary policy, very restrictive monetary policy. So I would say probably modestly restrictive. And so what it will take is confidence that inflation is coming down. Now I would say without tariffs, that confidence would be building, because if you see what's happening with non-housing services and housing services, which are the other two big pieces other than goods, those are coming down really nicely now. So I think we have to learn a little more about tariffs. I don't know what the right way for us to react will be. I think it's hard to know with any confidence how we should react until we see really the size of the effects, and then we can start to make a better judgment. So that's what we're doing, and I think we can take the time to do that because unemployment is 4.2%. Wages are moving up. Real wages are moving up at a healthy clip now. And inflation is 2.3% headline inflation over a 12-month basis. So it's a good economy and a solid economy with decent growth.
Thank you, Chair Powell. So you're saying that uncertainty has come down, the economy is moving at a solid pace, inflation has come down over the past 3 months, and this is all moving in the right direction. So are you indicating here that Americans should expect some sort of economic pain in the second half of the year?
I'm not saying that at all. From our standpoint, what I can say is that the U.S. economy is in solid shape. Inflation has come down. The unemployment rate remains at 4.2%. As I mentioned, real wages are moving up. It's a good job creation is at a healthy level. Unemployment, again, as I said, low. Labor force participation in a good place. So, and what we're waiting for to reduce rates is to understand what will happen with really the tariff inflation. And there's a lot of uncertainty about that. Every forecaster you can name who,
look top right.
Forecaster with adequate resources and forecasts for a living, is forecasting pretty significant. Everyone that I know is forecasting a meaningful increase in inflation in coming months from tariffs because someone has to pay for the tariffs. And it will be someone in that chain that I mentioned between the manufacturer, the exporter, the importer, the retailer, ultimately somebody putting it into a good of some kind or just the consumer buying it. And all through that chain, people will be trying not to be the ones who pick up the cost. But ultimately, the cost of the tariff has to be paid. And some of it will fall on the end consumer.
Look
We know
for
that
Meta,
because
see if that is able to find
businesses say,
support at
that's what
5-day
the
moving
data
average.
say from past. So we know that's coming. And we just want to see a little bit of that before we make judgments prematurely.
And follow up on that. So you spent years though talking about how you're data dependent, and be a little more direct on this. Now you're making decisions looking forward. Doesn't the data you're seeing today indicate there should be a rate cut?
No, I mean, your monetary policy has to be forward-looking. That is elementary. You've got to be looking. I always talk about the incoming data, the evolving outlook, and the balance of risks. We say that over and over and over again, right? So
elementary.
it's always forward-looking. If you know, at the very beginning of the pandemic, we cut rates to zero immediately. Nothing had happened. We just knew that it was going to be really bad, right?
The
So
trap
we
is set.
took very aggressive forward-looking because we knew things were going to be unusually difficult. So, of course, this is something we sort of know is coming. We just don't know the size of it. And again, the economy seems to be in solid shape. So the labor market's not crying out for a rate cut. Businesses, were in a bit of shock after April 2, but you see business sentiment, you talk to business people now, there's a very different feeling now that people are working their way through this, and they understand how they're going to go, and it feels much more positive and constructive than it did 3 months ago, let's say. So again, we think that our current stance of monetary policy is in a good place.
Amara.
Thank you. Amara Mokwe with Bloomberg. Chair Powell, in February, you told Congress that the Fed is, quote, overworked, maybe not overstaffed. Then in a memo to staff in May announcing a deferred resignation program at the Fed, you said you wanted
just
to
gapped
ensure that the
down
Fed
on
was,
the
quote,
15-minute or in the
right-sized.
5-minute.
Those two statements appear to be at odds with one another. Could you explain what changed in the roughly 3 months between those statements that made you decide that staff levels at the Fed should decline?
I don't see them at all as intention. So I was asked, is the Fed overstaffed? And I said no, and I sort of said as a pun, overworked but not overstaffed. People do work extremely hard at the Fed, and I know they work hard at Bloomberg too. So, but we do. We work hard, but I would say this. So we are careful stewards of public resources, and sometimes you need to show that. So there have been several times in our history, modern history, where the Fed has said, you know what, we're going to do a buyout. We're going to show the public, we're going to demonstrate that we are good stewards of public resources. So we thought, and I thought, that this is a time when we can, we grow at about, our headcount has grown at about 1% a year. So over the course of a couple of years, we're doing a careful scrub of the board and all the reserve banks, and we're going to find 10% of employees who can do something else, where we can streamline our operations, and we think we can get there in a couple of years. We think we can do that, and we think this is without taking risk to carrying out our critical missions. So this is something you do very carefully, thoughtfully, and you do it, again, respecting that we have critical missions to carry out. I've had experience, a lot of experience in my prior careers, with headcount reductions and things like that, and this is how you do it professionally. You do it carefully, thoughtfully, with a lot of planning, and you do it over a period of time. And I think the Fed will be fine. I think no one will notice any decline in our ability to carry out our missions, and I think it's just us wanting to demonstrate to the public that we are actually good stewards of their resources. We're effectively wiping out 10 years of headcount growth with this. So, I mean, we wanted to show that, that we're good stewards.
How is progress on reducing headcount going so far? Are you on track to meet the goal?
We're just at the very beginning. As you know, we're doing a buyout program. We're going to hit that goal. I think many organizations find that they can do this. You don't want to do it every year or anything, but you can do it at intervals, and you wind up not interfering with your ability to perform your jobs.
Chair Powell, Claire Jones from the Financial Times. As you're no doubt aware, the Senate Finance Committee has tabled its version of the reconciliation bill this week, and I was wondering if you could tell me a little bit about the tenor of the debate at the FOMC over the past few days on fiscal policy and the degree to which that influenced people's projections for 2026 and beyond. Thank you.
Yeah, so, we don't sit around and debate or really discuss. We take fiscal policy as fully exogenous. And so we actually, really didn't talk about the bill or the contents of it. It's still evolving. When it gets closer, remember also we have a very, very large economy, and that the effects will be at the margin. I expect that they may already be in, but they will be in by the next meeting. We'll make an estimate. But it's not a major thing. It's nothing that we discuss. It may have been mentioned a couple of times, but as something that's coming in. But I think the outcome is, we don't know the outcome yet there, so hard to be real specific.
But he has a thought for the outcome.
Thanks, Chair Powell. Neil Irwin with Axios. There have been some cutbacks in economic statistics collection in the last few weeks. Worries that long-running problems around funding
Definitely
and response
possible,
rates may be getting worse. How much is this concern on your radar? How much confidence do you have that the gauges you're watching to assess the economy are reliable right now?
Two things. One, the data we get right now, we can do our jobs. I'm not concerned that we can't do our jobs. That's not the point. The point really is that we are starting to see layoffs and important gatherers of data are saying that they're having to cut back on the size of their surveys. That's going to lead to more volatility in the surveys. I think we should take a step back and, from our standpoint, and I think the standpoint of businesses and governments and everyone, having really good data on the state of the economy at any given time is a huge public good. It helps, it not just doesn't help the Fed, it helps the government, it helps Congress, it helps the executive branch. More importantly, really, it helps businesses. They need to know what's going on in the economy. The United States has been a leader for many, many years in this whole project of measuring and understanding what's happening in our very large and dynamic economy. And I hate to see us cutting back on that, because it is a real benefit to the general public that people in all kinds of jobs have the best possible understanding of what's happening in the economy and hence what's likely to happen. It's very hard to measure what's going on in the U.S. economy. If you read, there was a book called, it's really remarkable how many things you need to understand to estimate U.S. GDP. Very, very difficult, and it's so important that we get it right. I just would say it's not a place to I would want to keep investing in that, for the good of the general public.
Victoria.
Hi, Victoria Guida with Politico. So you're conducting this monetary policy strategy framework review, but next year we're supposed to have a new Fed chair, and I'm wondering if that affects at all the way that you're approaching this. How do you ensure that this framework will actually be durable?
The framework document goes back to 2012, and it's the committee's document. It's not like we're going to invent a brand new way to do things. It's been an evolving document, so it shouldn't depend on who the chair is at all. It should depend on what's happening in the economy and what the committee wants to do. So, yeah, it isn't really tied to any particular chair. And we used to renew it every year. Now we do it every 5 years. So, but I don't think I've never heard anyone raise this issue that, a new chair might want to come in and go in a completely different direction. I really don't think that's right. But but that's not going to be up to me to decide.
Is that affecting at all who you're consulting with?
Not at all. Not in any way.
Thank you. Chair Powell, Matt Egan from CNN. Relatively low gas prices this year have helped drive down inflation in recent reports, but that trend is starting to reverse given the crisis in the Middle East. How are you thinking about how the Israel-Iran conflict will impact the economy, especially inflation? And what lessons were learned during the 2022 period when another conflict, the Russia-Ukraine war, sent oil and gas prices skyrocketing?
So, of course, we're watching, like everybody else is, what's going on. I really don't have any comment on that. Possible that we'll see higher energy prices. What's tended to happen is when there's turmoil in the Middle East, you may see a spike in energy prices, but tends to come
leaning
down.
Towards that.
Those things don't generally tend to have lasting effects on inflation, although, of course, in the 1970s, they famously did, because you had a series of very, very large shocks. But we haven't seen anything like that now. The U.S. economy is far less dependent on foreign oil than it was back in the 1970s. So, but there.
A quick follow-up. I've just got to ask you about artificial intelligence. Some technology executives have recently been warning that AI could wipe out a large chunk of entry-level jobs and significantly increase the unemployment rate. I'm wondering how concerned you are, if at all, about the threat that AI poses to employment.
So this is the question. The question really is, will AI be more augmenting labor or replacing labor? And I wouldn't, we all see those announcements, including one today. I wouldn't, overread a couple of data points, because, AI should be creating jobs at the same time. It may be replacing, maybe doing both. Anyone who's done any work with it, with AI, will have been a little bit stunned
People are buying puts
at how
for
capable
tomorrow.
it is. And it's just a different thing. So I think this is something that certainly has transformational potential. And probably we're in the very early stages of it. They say what you're seeing now compared to what you'll see in 2 years is going to be very different and even more effective. So I think it's really hard to know. Of course, there are optimists who feel like it's going to make everybody much more productive. And there are those who think it's going to replace an awful lot of jobs right across the income spectrum, white collar, blue collar, and everything. So
VIX is suggesting it wants to roll.
We don't have a
Still holding
view
though.
on that. But this is going to be a very
Price.
important question for some time.
Greg.
Thank you. Greg Rapp from MarketWatch. I was wondering if you could step back a little bit, Chair Powell. There's a spate of articles and a lot of op-eds now in the newspapers saying that the U.S. economy and the global economy is going through this profound change, akin to the end of the Bretton Woods era in the 1970s. And don't you owe the American people some sort of explanation for what we're going through? I mean, I noticed earlier this month when you talked about Bretton Woods a little bit, and you said that Bretton Woods, the Fed staff had to change how the dollar, movements of the dollar was impacting the economy. Are we going through something like that now? That, are you having to change how you do monetary policy? Is it that fundamental a change underway? Thanks.
It's certainly a time of real change. From a geopolitical standpoint, from a trade standpoint, from an immigration standpoint. You see this not just here, but everywhere. So there's quite a lot going on. It doesn't change the way we do monetary policy in the near term. And it doesn't change our objectives or what we need to do. And, these things are not really our issues. They're really issues for elected governments. All of those issues are really for elected governments. But there's no question it's a time of real change, and very hard to see where that goes. Will it be? There have been many, many things written about how it's going to be a more inflationary time. That's possible. It's not guaranteed. AI could cut in the very other direction. AI could make people much more productive and push in the other direction. I don't know though. So, but you're right. But
Dollar
honestly,
is confirming
our
daily
focus
divergence
is
right
a
now.
much more practical one, and that is how do we keep inflation low and employment high in the near term. That's really what we're about.
Mark. Mark Hamrick.
Hello, Chairman Powell. Mark Hamrick with Bankrate. What is the view about the growing amount of slack in the job market, including the softening in payrolls, the forecast of a modest rise in the unemployment rate, and the ability of workers to demand wage hikes or not in this environment where you have inflation surging?
You don't see you don't really see unemployment going up. You don't see increased slack, really. I mean, at the margin, remember, you're at 4.2% unemployment. That was, for many, many years, that was a extremely low level. It happens to have come up off of an even lower level as we came out of the pandemic. We were as low as 3.4%, but 4.2% is probably at the low end of estimates of the longer run, sustainable level of natural rate of unemployment. So I guess I wouldn't agree with that. And also, in terms of wages, real wages after inflation have been moving up sort of more than was consistent with 2% inflation. They're still moving up at a healthy clip, and I think much more consistent with 2% inflation given a reasonable assessment of trend productivity. So it's a pretty good labor market. You're right that the level of job creation has come down, but so has the supply of workers, the change in the supply, the new supply. So you've seen the unemployment rate remain pretty stable at 4.2. It's been as high as 4.3, but those are good numbers. So it's a pretty good labor market. There's a more concerning thing is there's not a lot of layoffs, but there are not a lot of job creation. The number, if you're out of work, it's hard to find a job, but very few people are being laid off at this point. So that's an equilibrium we watch very, very carefully, because if there were to be significant layoffs and the job finding rate were to remain this low, you would have an increase in unemployment fairly quickly. But that hasn't happened. It really hasn't happened. The U.S. economy has defied all kinds of forecasts for it to weaken, really, over the last 3 years. And it's been remarkable to see just again and again when people think it's going to weaken. Now, eventually it will, but we don't see signs of that now.
Go to Jean for the last question.
Hi, Chair Powell. Jean Young with M&I Market News. There's been a lot of talk about cuts. I wanted to ask you, why do you think there are no forecasts for rates to rise or even to stay where they are next year, given that the projection for inflation is to rise to 3%, and there's there's some skepticism over whether those price hikes will be a one-time event?
So there are a number of people on the committee who wrote down no cuts this year, but some cuts next year. So, I think, people are writing down their most likely path, right? They're not saying there's zero possibility of other things. Really, think of it as the least unlikely path in a situation like this where uncertainty is very high. I think, again, people write down their rate paths, and they do not have like a really high conviction that this is exactly what's going to happen over the next 2 years. No one feels that way about their rate path. They feel like, what am I going to write down? I mean, what would you write down? It's not easy to do that with confidence. So I would just say it that way. We don't rule things in or out. Certainly a hike is not the base case at all. It's not something people are writing down. But in the meantime, we do the best we can with these forecasts, and I think they're representative of the different forecasts and different reaction functions that people on the committee have. So thank you very much. Thanks.
Oh, thank God it's over. Okay, anyway, let's watch a lot of stocks. No. So what I wanted to point out, there's just one statement that was made that kind of was interesting to me. And it's not necessarily something that's related to markets right now, but look for this 30-minute divergence, by the way, for the SPY. Volatility for right now is suggesting that it wants to roll this move and get the 2-hour 2 pull back. If not, see some kind of daily move down here. To do what? To go down to lower levels, to go test 1683, to go test 1504. So just be aware of that. It can whip back up at any time. This is where you have to be very reactive. We can make a top at any moment. This is why a lot of people choose to stay away from these big options expirations, expiration. They stay away from these things. But I want to point out something interesting real quick for me was the fact that he said blah, blah, blah. Okay. He says he's forward thinking. This is where the Fed does not make sense to me. They say they are always forward thinking, but then they also say we're going to wait on the data. And then he said something here that's very important. It tells you a lot about how the American economy works. We are very, very bad at knowing and pricing in downside risk. We are very good at pricing in upside risk, right? But the markets aren't very good at pricing in downside risk as far as it stands. They usually wait till they hear the bad thing. And that is exactly what Jerome Powell is talking about, because he said the job market is not screaming out for a rate cut. Do you think, as you're a human being with a genuine, like just have common sense thinking, just common sense, if you say the statement, the job market isn't screaming for a rate cut yet. If you say that statement, are you forward thinking? No, you're not. You are backwards. You are waiting for the bad thing to happen, then reacting. You are not reacting before. All right, that's one thing I wanted to get out there. Everything else is just freaking up and down kind of moves. The market's going to do what the market wants to do. The market was already planned to go. If the market goes up tomorrow, it was already planned to go up tomorrow. Or not tomorrow, but Friday. The other thing I wanted to point out to you, very, very interesting things. We're going to walk through this together real quick. Okay, as far as the war thing goes, all right, let's go top to bottom here. So let's look at the 10-year yield. Wartime does make 10-year yield go up sometimes, right? So the 10-year yield looks like the daily's pulled back. We showed off the 4-hour trying to make that higher low. And we see that if this curled up right here, we could see an upward move for the 10-year yield. Okay. We also see the dollar. The dollar looks like it wants to do what? Have a daily divergence and see some kind of weekly cross up, some kind of big move to the upside. That one's pretty simple. You see it blatantly on your MACD, blatantly on your RSI. Interesting. We also can go down to something like US oil. Now, this has a different look to it. It's already been popping off, but who's to say that's going to stop? As of right now, your 2-hour says you could get some kind of reversal here. You could get some kind of 4-hour reversal, some daily reversal. So even though we have the other thing saying we want to go up, oil is saying we might want to pull down and then go up. So this would be our window for maybe positivity, right? Maybe. We'll see. But the interesting thing for me is the 10-year yield and the dollar. US oil is already up. The 10-year yield says, I want to go up. The dollar says, I want to go up. You know what else says that they kind of want to go up? Remember when we talked about gold on the 4-hour chart? If the 4-hour reverses to the upside here, this would be very interesting times where you have potentially the dollar go up, the gold go up, you have the 10-year yield go up all at the same time while oil prices are elevated. This can be reactionary to what? The actual war, I think. I think this could be reactionary to the war, and that's why you're seeing so many of those type of things right now. Now, what you care about is what's the market telling you after you received all of that talk? It says, this is bad. We rolled it. Good thing we were watching that 15-minute. But it also tells you, hold your horses. We have an event going on today where you have to be on your toes. If this is able to curl up, we are not losing the super critical level at this moment. So if we are able to see positivity soon, as in on Friday, we could see a move to go test something like 604.83 on Friday. We could see a bigger move than that to set a trap, and we'll be watching that with you, okay? So for the time being, you do have divergences here. You have volatility that looks like it wants to curl down. We were showing off VVIX to show there's 30-minute divergence. Your 2-hour could turn down here. VVIX is suggesting that this is a double top, and we're going to see some kind of move like this, maybe even into next Wednesday. You're looking for VVIX to curl up into positive territory. That is where volatility will start to move a little bit quicker. As it stands, the market is still in an okay spot. It looks very rough, and I'm not going to play upside here. You are welcome to do whatever you want with these signals, obviously. You're the one clicking the buttons. But my assessment at this point is I'm going to be nice and patient and see if a short still pops up, because that was my whole plan for pretty much this entire week was, look, have a nice week, enjoy yourself, teaching some people about some stock market analysis, and sit there and go, okay, If we see this, then that, right? If I see the 2-hour divergence outside of that blue line, I can take a play with a risk to reward using divergences. But what happens next Wednesday? Exactly. That's kind of what I was going to look at after I get through this. But for the time being, you're rolling moves right now, right? The only reason I'm inclined to kind of be like, okay, this could still head up is because of OpEx. Normally with a look like this, you would say, hey, price can hold up. The 2-hour can still curl up into positive territory. But if you lose this, then you are going to go down to this. And that's how you'd really look at this market at this point. The only reason we're saying that this can happen first is because we've been saying it the whole time, looking for that divergence. And the 30-minute gave you that divergence down here during the price action. So the thing we're paying attention to is now actually has a signal for. So if that signal is able to confirm probably tomorrow or probably Friday morning, because I highly doubt you're going to confirm that today, then you can see more upside. This right here. Just be aware. The other thing I was going to do was going to look into what's going on next week. You don't really get anything next Wednesday, but you do get the GDP growth rate next week. You guys shouting out GDP. If we leak this move higher into GDP, that can be a big deal. So next Thursday, before market open, you will get GDP. So if we are able to do what? Extend the move for, say, 2 30-minute pushes. One push like this, we just go higher, and then we go maybe higher into even Monday. And then we start to pull back into Tuesday. And then we head up into something like, Wednesday? Yeah, okay. Bam, bam, bam. And then we run into uh-ohs. And that could be the moment right there. So this has extended out for a little bit of time. We talked about that yesterday and a little bit today. So we have made certain reactions that can extend the move for some time, but just be paying attention to the same thing. Now, if we're able to explode here on the 2-hour and just see it climb and climb and climb, you would look for those signals here. But I would highly, highly assume that we are going to see some interesting things around this blue line soon. All right, so nothing has changed, and that's the unfortunate part. It's kind of like if I made a YouTube video about today, or it would be slightly different. But overall, nothing has changed from our Sunday private stream, correct, Patreon members? Nothing's really changed. I'm just sitting back, being patient, seeing if it gives me the risk to reward short opportunity. And now I'm seeing if volatility turns down on a 2-hour, so I can buy it on the 2-hour if it curls back up. And then that is where we will get the daily pullback. So this looks like what? Now we say, okay, it could extend into Friday, sorry. We'll have to really pay attention to OpEx. But this could also extend into Wednesday if we don't see any kind of war stuff, if we don't see anything that escalates, if we don't see a reason to sell off and we don't see sell-offs confirmed, but instead we see this 30-minute divergence confirmed, we should expect a 2-hour move to the upside throughout Friday if all goes well here. How would we like to do that on Friday? Well, you would like your 30-minute to start off by going up, start off by coming down, go up again without crossing down on a MACD or anything like that. And then you would like to go to potentially a daily or weekly expected move, and we will see how strong that move is. All right. If we see this 30-minute gets to here by Friday close, and we see little divergences, we could say a pullback is coming. And if that pullback crosses down a 2-hour, we can treat it very seriously. But now you know that this could extend into next Wednesday, but there is heightened risk of geopolitical news. There is heightened risk of some funky things with options expirations, the quad witching on Friday. And you have to take that into consideration with how you're going to trade from here on out. And this is why I'm choosing to be patient, right? This is what these type of streams are for, is to tell you guys moments in the market where I could take a play right here. But I think that the easier play to execute will be the daily swing to the upside. I don't have to play it. I don't have to trade every single signal I see. I see signals constantly because everyone talks about them. But I just wanted to point that out. We've got a few minutes left in the market. You've enjoyed hanging out all day, Will. I'm glad you guys were able to hang out in here. Just let me know, Will, real quick. Did you guys like having the stream kind of just up so you guys could chit chat? I don't know if you guys chatted a lot, but I just want to know. I'm sorry, guys. I like my gym time. I like my lunchtime with the girls, so it's just something I won't give up. I'm sorry about that, but it's just for me, you know? Yeah, there were some good tips. Okay, so yeah, and make sure that if you are talking and suggesting things in the chat, make sure you're, as you know, if I'm not here, make sure you're a seasoned trader trying to give that information. If you're someone who has been using these strategies, using weekly and monthly moves, and using the management of the trade as far as risk goes for a while, that's good. Try to help people out and say, hey guys, just so you know, this 15-minute is rolling. This looks like management of the trade. Give it a look. You might have a decision to be made. But if you're someone who is still in the learning process, so guys, be very honest with yourself. If you're still in the learning process, don't be shouting things like, oh, this divergence on this is going to play out perfectly. If you're someone who's a little new, that's all I'm saying. Okay, if I'm not here, make sure that you're not shouting things out if you are not already a seasoned trader, okay? You can say your ideas, you can ask questions, and maybe a seasoned trader can help you out if I'm not here. And if you want to hold that question till I am here towards the end of the day during these private streams, that's perfectly fine, okay? Some of us don't have, people have, you have yourself, right? You should love yourself a little bit, Jeremiah. Love yourself just a little bit of this, a little bit of that. Two-stepping on the, I don't remember that song, but it's a good one. It's a banger. Why'd you sell GME? What is it? Wait, you sold the actual like stock? So for GME, I drew something up during that that Jay Powell speech. Okay, GME is still extremely negative. So something that would be interesting here is we extend the move, divergence. We extend the move, higher low. The other thing would just be, do we actually just curl up a daily chart on like Monday or something like that? And this is some kind of shakeout trap. You know, our boy Robert, I don't know where Robert's at today, but our boy Robert's really banking on some good things this Friday. So I'm interested to see it. And Robert, if you ever are in here or anything like that right now, just let me know, because we're going to chat about what happens. AMC, weirdly enough, going down to the perfect point. You do not want to lose that. That is why it is in red. You do not want to lose this entire zone. It's okay to fool around in it. It's okay to fool around in the bottom, but once you start to see price get outside of there, you look for those reactions in to fall again. All right. So this is very good. You do see 30-minute divergence. You do see it on the MACD and RSI, meaning the 2 hour is going to try to get a move. The 2 hour is leaning towards what? A lower high. Okay, you are still leaning towards a lower high for AMC, so this will need to see extreme positivity on Friday to say it is in a good spot, right? And then that's the look you're looking for, that little lightning bolt, that little Harry Potter. It would be nice to short Tesla until Friday expiration. I wasn't paying too much attention to Tesla, but it is still in the same place. It is still in the same spot it was, and this looks like a potential higher low, actually. Sorry if you guys hear my thing beeping. Yeah, you want to see if this 2 hour can get the next move higher. Because what you're looking for is rejection from like I think it was like 345. So all you have to do is really map this out and be like, okay, based on the 2 hour, what am I paying attention? Okay, we need to take out this high. Where did we see support that potentially became resistance? It's actually like right here. I would just mark that right there, or include that little tiny wick right here. And then say, if we can break through that, that's good. What's right at the center, actually, if you include that? The weekly expected move. So you literally could see a 2 hour move like this and then totally fail that move. Totally fail that move. Daily fails to cross up, you curl down, right? If you're going to extend this into, say, Wednesday, then this 2 hour move would just take some time, right? Then you get into Tuesday, Wednesday, maybe you peek your head above, you roll it, and you head down. So right here is going to be critical this week for tomorrow, 350. If you get there, you got to be a little bit cautious. We'll leave that blocked off. This one's your red zone, just so you're aware. And now you kind of will go like this and then like this. But yeah, so I'm not like against Tesla. I don't think I would be like necessarily like, oh, this is an easy short right now. You technically have higher lows. You're building up and consolidating in some way. Like, right, you can probably like build up a little triangle right here and say, which way do we break? You would say, which way do we break? Right? And right now you're seeing, oh, now we get tighter, we break out. Is it a fake out though? Right? Or do we see a good breakout, right? And we're able to get all the way to 350, maybe even by next Wednesday. That'd be great. As far as it stands for next Wednesday, the data to pay attention to, since we now know we can extend out to there, is going to be the GDP growth rate on Thursday morning. So this means we could go up into Wednesday close. But GDP growth rate, we do see 2.4% was the previous. We see negative 0.2. If that comes in lower than negative 0.2, it will be a good reason to top this market, right? You don't want to treat quarterly OPEX like it has to be bad right away. Sometimes it is, and it utilizes expiration to do so. But at this moment, we just saw a lot of things from the SPY that says we could continue the move for a little bit here, all right? Now, in order to know, like, hey, is it highly probable to continue the move? What do we need to do? We need to see a 30-minute curl up today, very unlikely, but tomorrow morning, meaning Friday morning, because we have a day off, and I keep making that mistake. But yeah, I see Apple. Apple doing very good things now, right? Setting up that point of divergence, right? You're very, very quick with this. You're always looking for if your timing is just a little bit off. And now you have a new high to pay attention to. So this could confirm, and we could finally get that 2-hour move, and maybe we hit a weekly expected move next week. The move that you would like to see is like this. This is a trade. Try to execute there. Then you pull down. This is another one. At that point, you'd be looking for what? Probably one more, maybe a 30-minute pullback that actually goes up one more time. And then you see where that weekly expected move is, right? And then you see if you can roll that move. As it stands for Apple, the 2-hour is looking to retest into where? Well, let's pull up the 2-hour chart. We see resistance, support. Support turns into resistance, right? We talked about this in the course when we added that video. So mark off the highest point, mark off where those resistances and stuff, the support became resistance. And then you just say, okay, this is the green zone. We need to break through all of that to be actually like high percentage bullish. You can go up into here and just reject and turn down as it stands. Now, you do have a 2-hour divergence and volatility. This is what's crazy. I want to tell you guys the crazy thing. We did say we extended it out into GDP. What if we see a mega squeeze here and Apple goes like this on the first push? Or maybe it even breaks through a little bit. Well, then you'd be looking for the 2-hour to pull back and then curl back up into positive territory. Got it? What that means as far as it stands right now and why this looks like we could see something, it is on the table. I'm still looking at that GDP growth rate, to be totally honest. I'm going to pay attention to that first rock. But you could continue positivity, see a pullback with GDP. So it really depends on how heavily, if we're going to see this 30-minute divergence on the SPY mean anything, it really depends on how heavy we head to the upside, like how fast, how good, how much price action we see just go bullish, how many things we wipe out. That's going to be important. But you have bought yourself some time here. If you want to head to that upside, you've bought yourself the time to do something like this, but you're aware the risk of not even making a 30-minute divergence is possible. And I think you're more looking at 610 at that point, if you want my honest opinion. That means we could peak our head to all-time high, and that would be fine. Once you break out of here, if you're able to see like 618, then it's very likely you're just going to sell down to something like 585 or even just 600. So it's just about how high can we raise the floor by the end of the month after expiration, after quarterly OPEX. And I am really leaning towards a trap next Wednesday now. I'm looking for a 2-hour trap tomorrow. I think we've extended the time, though, to where you could see the trap take place all the way into Wednesday if we wanted to. Yeah, John, just do your best, right? You're still learning. Just do the best that you can. And when we do more of these private streams, Jonna, we'll really go through it with you, okay? Especially the next time. As far as it goes, let's do this for you. So Apple curls up. It gives you the divergence, and it says, I'm going to go on the 2-hour. Okay, if you don't beat this high, it's bad. So what are you looking for? The 15-minute roll right away. You're going, okay, we're going to roll this right away. I don't think this is going to fail. I think this is going to at least 200 personally. But we noticed that this would have to see a pretty strong move to do so. So you're going to need some good news during kind of rough times. Kind of a rough scenario there, right? I'm not planning on playing this, but this would mean if this were to confirm, I'm looking for, if that's really close to the center line, to roll before we're able to show our head above 198.72. If we do this and we do this, it's not good. So if you see a 15-minute confirm this signal, which the price action is, the RSI is, so early people, if you like risk, hey, you only have 2 reasons here. I like 3, but 2's fine. Sometimes I do it on 2. This means you're just waiting for tomorrow's reaction and seeing, can we beat those levels? If we can beat those levels, you have equal lows. So this could be 1, 2, 3. And this seems to be the more probable situation going on here for the 15-minute chart. And that gets you into your 2-hour risky area. Okay? We'll go over this more and more. Keep bringing up Apple, Jonna. If you are, especially if you're in it, I will look at it with you, okay? Oh, god dang it. I keep saying tomorrow. You guys know what I mean. The next trading session. All right? Tomorrow means next trading session now. I keep accidentally saying tomorrow. I know that it's closed tomorrow. We're going to go into a complete off day into OPEX. It's like the most sketchy week in history for quarterly OPEX. Hood and SoFi went crazy. How did SoFi end up? SoFi's getting to that risky area. Do you see how a lot of these are like, oh, we could stop this right now? Your 30 minutes not leaning towards it at this point, but the 2-hour really is shaping up exactly what we want to see. So what do you want to see from SoFi? It's not curled down yet. This trade is not here yet, okay? You potentially won't even have the signals to get in early. You want to see those signals form. Boom, boom, right? We want a pullback on the 30-minute that shows us that there's weakness on the shorter time frame, right? Even if it's just on the RSI, just a little guy like this, we can make an attempt and use our skills, correct? So you can see here at these tops, you see a little divergence right there. Bam, big downward move. We don't have that right now for the 30-minute, for a hint. So in order to really take a play like this, it would say it's a 2-hour trade. So for me, that means buy 4 weeks at the least. Buy 4 weeks. That way, if I want to hold on to it through a bounce, sell some, reapply, or sell all, get it back, I can. And what you would look for is the 2-hour to actually confirm. Now, in order for the 2-hour to confirm, you're going to have to see 2 pretty bloody bars, but you're extended away from your moving averages. You would hope to see a 30-minute divergence first, but if the 2-hour were to confirm down, I can take it, and if that 30-minute reverses up, I can say my timing's bad. 30-minute curls back down, I can say my timing's a little bit better. What you are looking for is the trade from where to where. You're pretty much looking for the trade from here to here, or here to here. Then you see the bounce, then we go back down. And you see how we're going to, most likely we'll try to bounce at some point. But that would mean we're going to bounce with GDP. And I just don't see that. So I think we'll continue this move into GDP if you want my honest opinion, or this thing could squeeze and pop off. I think you're going to see boom into this, and then we'll start to talk about a lower high maybe on Wednesday. All right, that seems very, very likely. Now, what's the important part here about if I was long on SoFi? I have decisions to be made here. Do I think this is going to mega squeeze? Okay, well, do I want to make money out of the play? Okay, the decision-making areas are very blatant here for SoFi. It means understand that if you're holding everything, you're assuming that risk. The other one is, hey, you could potentially hedge right now if you would like to, right? You could keep everything in hedge. You could even sell half and leave the rest as runners. You could sell all of them except for a couple contracts, right? There's multiple things you could do in this area. Just note that this is a decision-making area for SoFi at this moment, okay? You've got Hood on the backup account. Let's go, dude. Hood, some forms of divergence. The 2 hour really saying, hey, I'm trying to top out, but I'm trying to extend the move, right? I'm trying to extend the move. And this is what's interesting. We could extend the move for the SPY. Volatility is kind of saying that we could. But as far as it stands, are you like happy with Hood? I would say as far as taking a long contract now, it's kind of like, ooh, I don't know, a long position now. Yeah, let it go nuts and then wait for it to pull back so you don't get caught up in some kind of euphoric rug pull. Or it's just going to use that 2 hour divergence to curl down now and get down to $65. Or if it's really bad, it's going to get down to like $50, possibly even by the end of July. So we'll see. I don't know if that's on the table. We'd have to look at monthly expected moves and things like that. We'd have to see how price ends the month, right? If the month ends like this, it is much more probable to make a monthly expected move down here where we can pay attention to reversal signals that are outside of our key area, but in this zone. So Robinhood, if you want to squeeze, go squeeze, son, but daily pullback seems way more probable at this point. We could just leak it higher into next Wednesday if we would like, or just this Friday if we would like. But so far, no big crash moment with J Pizzle for shizzle dizzle. Nothing happening there, so we're chilling. Yeah, I don't mind that platform. It's not my favorite, but I did take a look at it when they came out with it. It's kind of cool. It's pretty cool. Hood and yeah, Nvidia pretty sketchy. You're going to hold that thing, Pish? Hey, man, as long as you know, I just want to be the guy that tells you, Pish. You're outside of a 68% zone. Hey, crazy things can happen, all right? But I just want to let you know that. All right? My history with monthly expected moves is you rarely see like a 10% move outside of that move. A 10% directional thing. Okay, good. Yeah, so SoFi's cool. I think SoFi's interesting. I still think SoFi, as far as daily chart goes for SoFi, if you look at the daily, you're just going, what? Well, I mean, if you want to squeeze, son, right? You actually have a daily pullback, right? You don't have divergence, but you're always open to another daily pullback. But you're kind of hoping for another one of these, aren't you? You want one of those from right here. You want that. You want to start to take this level out, then see resistance come in. That would be insane. We'll have to, I don't know if we put out second standard deviations this month. Look at these memers just doing nothing. TLT, be aware that TLT right now is trying to shape up the lower high while the 10-year yield shapes up a higher one. This means that TLT does have a chance here to reverse down, test something like what? 83.05, if not 82.50. Okay, I really like the level of 82.50. Yeah, that's always the better ones. It's always the better investments are always the one where you just see blood, everyone hates it, and then you just go, it's pretty cheap. I'm gonna buy it. It's 50% off. Remember Tesla? Remember when I was memeing on everyone about Tesla down here? It's like, oh, it's awful, it's awful, it's awful. I'm like, I bet you Tesla tests $300 before it sees $200, and then it goes to $300. Like, and then this area, everyone's losing their mind, and I go, this is gonna go to 325. Now, sometimes we're wrong on those, but we were paying attention to things correctly. Everything's set up that we were aware of. That's why we ended up being right. Right? Everything we wanted to happen happened for Tesla. We will not have a YouTube video tonight, but we will have a YouTube video in the morning to get you guys all of your daily expected moves. We will have, maybe we'll do a breakdown using these charts tomorrow. That way we can utilize weekly and monthly expected moves to track what's going on and mention that we could continue into GDP. Sound good? Not Friday morning, actually. The video will come out tomorrow morning. Yes, this time I really do mean tomorrow as in Thursday. the one time I'm like, whenever I say tomorrow, it means Friday right now. And then I'm like, tomorrow? No, I meant Thursday. Thursday morning, yes. And we're going to do it kind of like a Sunday private stream, Jonna, okay? But it's not going to be in stream form. I'm just going to film a video using all those moves. And we'll go through every single stock that we do cover. Yeah, so we'll be looking at Apple and stuff like that. I know, right, Shen? Pretty crazy. Some good moves. You're not really getting confirmations from SPY. You are getting confirmations from the VIX. You have kind of a SPY's kind of like, I don't know if I want to go yet. I don't know if I want to go yet. But volatility is like, I'm confirmed, I'm breaking trend, I'm rolling the move, like I want to go down. So the only thing that's on the table for some risk on Thursday is there were some people reporting that the United States could actually join fully in the war on Thursday. So just be aware of that. That could be speculation and an overall good guess by certain analysts on that side of things, political side of things. But you have to be just aware. So what does that mean? You just might want to be careful over this weekend. That's all it is, right? We're careful going into Wednesday of next week, all the way from now into Wednesday. Where technically we should be careful all the way from now into the first or second week of July. We haven't looked at HIMS. We can look at HIMS. HIMS is going to be a daily pullback, isn't it? Oh, that's a crazy place to hold up, but that is solid. You held up in the first place you could, and that's impressive for HIMS. So with this type of look, you're looking for the next move higher. I don't know if you'll see the same type of move. Wait, is Oakland in here? Who knows about HIMS? Do they have any kind of problems with them? I just want to know before we talk about it. Like, the squeezability of this stock is very, very nice. If you saw this full move, you'd probably get to like $100. Take like one of the lower points. You almost get to like $100. That's crazy. I don't know if you see an equal move here. I would watch out for potential divergences over the next few trading sessions. I would look for, do we extend the move and then do we drop? If we extend and we violate divergence, that's even better. You're just happy with it. The 2 hour as of right now hasn't seen some kind of big breakout kind of moment. And this kind of worries me, to be honest. Ugh, I don't know if I like that. 2 hour little divergence, but overall with this one, you're looking for the daily to swing trade and head higher. So how you would like to go, right, is use this, right? You go boom, pull it down, then you go up. That'd be great. That'd be pretty good, actually. Now, if HIMS just wants to go, it wants to go, because the last time it had a daily signal like that just curled up and went positive, what happened? It just freaking went. So it's extremely positive and it's trying to continue the move. I think it is very likely to see a new high. That's how I would put it. Watch out for risk in this area or a roll to go down to lower levels before it goes higher. Very interesting, though. I do not mind it. I just, it's a little choppy in there, right? But it's building. Like, that's the thing, too. Whenever it's, like, choppy and it's that tight, like, right, you see euphoria into a drop, and then it kind of goes like this. You're building, you're building, you're building, you're building, and eventually you're going to see boom or boom. You're getting tight. I know, man, Duranto. That's kind of why I kind of felt that trying to trade this week would cause a lot of managements for the trade, especially around FOMC, man. So I get it. This is going to be frustrating. This is why usually on weeks with the FOMC, a lot of the time you'll hear us shout out and just be like, you know, treat it like a rock in the stream if you just want to like go away. Treat it like an earnings. At least at this point, you have a 30-minute signal. That's very nice. Imagine you shorted that. That's where monthly expected moves and like second standard deviations can come in. Like if you look at, so your second standard deviation for the market, you're not even close. Your second standard deviation, I believe, is on my other charts, but it is like 645 or something like that. So you would have to see like wham. And I don't think I think the highest you could get is like this little trend right here before you daily pullback. I think like this is as high as you can get because that's where the monthly expected move starts to come into play. So I think the highest you could get is this trend line, meaning like 620. But I'm not necessarily in that thinking. I think we're going to set a trap on Friday or set a trap next Wednesday. VIX not dead yet. It's not dead. You still have this is why I'm not playing right now. I'm like, VIX ain't dead yet. It's not. It's saying it's curling over, but what did we say during Jerome Powell? If you heard me talk about volatility, I said, hey, VIX is suggesting it wants to go down, but it's holding. If it holds 20 and curls up off of 20, we might see some, we might see more than fireworks over in Israel. Let's put it that way. Or actually Iran. I would like to see the Friday bull trap personally. So I think a lot of people would buy shorts today or buy hedges today too in reaction to potentially something happening on Thursday. We'll be watching, but you guys will hear me being very, very patient in this time. I've made my money in this run. I've, had to manage a couple of trades, lose a little, but the winners were just winners. 1, 2, 3, and I don't think I took it here. I took it here. 4, and this one was barely, I think this is where I started to start managing trades over with Apple. Of course, I decided to trade Apple during this time to see if it would participate. Friggin' bastard. But good trades. Very, very good trades. LOL at AMC. I still think they make 2-hour divergences. I just don't see them being able to come back, but I would like to see the signals get better. They could potentially get better by like July, right? I think there's the window from now to July 31st. And then after that, I think it would just go away until I think you have one small window in the fall. But other than that, you're looking at 2026. So Richard, you might be looking for another one of those pops to drop. All right, SPY was able to close. We are noticing that it is going to close with 30-minute divergence. This is the bad thing about the market. Pretty much 2024 to 2025. We really didn't run into this as much when I first started my channel and really in my trading history. The off exchange is now bigger than the lit exchange, which just means you're more prone to see like signals not confirmed before. It's going to make you assume more risk. You're more prone to just see like gaps and things like that. And if you notice, like this year is like year of the gaps. Like every day, I feel like we're almost gapping up or gapping down. So just be careful with it. Next week on Friday, we will be doing a stream just like this on Friday. Okay, so we're going to be doing a stream just like this on Friday. All right, where we just let you guys know about things and we look at setups and things like that, and you can choose to execute, you can choose not to. I'm choosing not to. I'm inclined to just be like, I've had good trades, I've had to manage a few, I'm just tired of it. I had a rough week last week with family stuff, so it's just, I would rather just focus on analyzing, focus on the direction for the stock market, and focus on, hey, if I can take that fun topping out play, that sounds very, very nice. So not necessarily tomorrow. We will have a YouTube video tomorrow utilizing these charts with the actual moves on them. And then we will, on Friday, have a public-private stream again, okay? So just a video on Thursday in the morning, and then you can watch that at any time. And then on Friday, we will do a stream just like this one today, okay? So just be aware of everything that we have going on. Hey, thank you guys for being here today. You guys have been fantastic. Some of you guys chilled here all day, and I think that's just awesome. We're staying aware of things going on. We understand we're at heightened risk, right? So if you're taking any kind of long or short plays, understand that risk and volatility can be heightened anytime in this period, right? I missed it today. Oh, I didn't do a private, like a full private stream. We were mainly doing this. Thanks for the advice, JK. Well, I mean, you know, as far as it stands, everyone here is very aware that you are the one clicking the buttons, right? That's all this is. All this is trying to show people who want to click the buttons a little bit better, how a person clicks the buttons a little bit better. And when they understand, like, we think differently about money. So maybe now you want to trade, but notice that I don't. That's just because we're different, right? And that's perfectly fine. You can make a bunch of money maybe next week. But me personally, I've made my money in this run. I'm waiting for the daily pullback. I'm kind of done with it after having to manage 2 trades. I was just like, well, damn. At least the profit from these ones, that one, this one, and this one were so good that 2 managements of trades here are like nothing. That's awesome. So I hope you guys have a great day. Just note that I am still paying attention to if we set a trap on Friday. So I am still paying attention to this, and I will leave you guys with that. Some kind of upward move with that pullback. And now we're in pink. That's fun. And then we can see some kind of upward move, maybe into next Wednesday, right? I'm going to draw this up like a 610 trap for Thursday morning. And then we actually start to tumble down, right? Tumble down. So we'll see if that's able to take place. All right. This is kind of what I'm looking for in markets. We'll see if it shapes up to be that way. But as of right now, I'm just looking for a 2-hour divergence at the high, whether that confirms or shows up on Friday, or whether that confirms on next Wednesday. Or if we want to roll down right now, I can stay completely risk-free, sit, wait for the daily pullback, and say, thank you. Thank you for the cheaper prices. All right, guys, have a great, great day. Oh, Jonna, hopefully you saw, did you see my message? Did you see my message on Patreon? I kind of showed, I think, this. Wait, was it this? It wasn't. Oh, it's Oracle, right? It's not this. It's Oracle. Yeah, I posted to the chat in Patreon that the best thing to do here is wait for 2-hour pullback, and now you kind of have it, right? It's very flat. So now you're looking for a 2-hour maybe trap or squeeze. This is a very, very good move. So look if that can continue. But if you just go flash up here and then you cross down, that's when you're a little bit more worried for a daily pullback, okay? So as of right now, 2-hour pullback, and then you're going to be looking right into what a daily pullback that could potentially take you all the way back down to fill this gap at 175. So the next really big opportunity would be a daily pullback, but you can extend that move on the 2-hour for some time if we really want to before we're able to get there, all right? Yes, I saw Oracle. Okay, good. The other one, not a ton of price action. Maybe I'll take a look at it tomorrow. All right, guys, I really have to hop out of here. Thank you guys for being here today. Thank you guys for liking, subscribing, hanging out all day. I will put out that video for you guys tomorrow morning on YouTube, and then we'll do a live stream just like this one on Friday. All right, guys, have a great day off. Peace out. Let's hope we don't see some war stuff tomorrow, dang it.